All right, let's try this again. Part 2. Streamlabs barfed on me. Had to reboot real quick. It was not YouTube's fault. Anyways, where was I? I was ranting about the lawsuit nonsense. All right, I see a tweet here. AMC earnings misses earnings per share minus 26 cents. Miss. Sales 968 million. Miss off of a 977 estimate. So let me put this up on the screen. Let me go to AMC's website. While I pull this up on the website, we can read through that there. Duplicate. So on my estimate, I underestimated revenue and I overestimated the earnings. AMC today reported results for the fourth quarter of the year ending December 31st. Live webcast will be in 35 minutes. We will be streaming that to hear what they have to say. Let's open up this PDF. Full year total summary. Total revenues were $3.9 billion compared with $2.5 billion for 2021. Net loss decreased to $973 million for the full year. Adjusted net loss was $727 million. Net loss per diluted share. There's that phrase that I told you we'd be talking about once APE came out, the diluted shares. That is your little tip off that APE dilution affects the entire company, including your AMC shares. Net loss per diluted share was 93 cents compared to $1.33 in 2021. So some improvement there as expected with the increased annual revenues. All right. But really what we want to focus on is the Q4. Total revenues for Q4 were $990 million compared to $1.17 million for the fourth quarter of 2021. I already warned you guys that Q4 this year was going to be worse than a year ago. Net loss increased to $287 million, including a non-cash impairment charge to long-lived assets of $133 million. Remember last night, if you watched my video, I talked about the goodwill impairment. This is what that is talking about. So there was a goodwill impairment of $133 million, similar to the goodwill impairment charge of $134 million a year ago. Adjusted net loss was $152 million compared to $57 million a year ago. Again, because of the big difference in the big decrease in earnings from a year ago. 1.17 billion versus 990 million. And that gives us a total net loss per diluted share of 26 cents compared to 13 cents in 2021 a year ago. Operating cash burn. Operating cash generated for the fourth quarter was $57 million. So I'm assuming that, again, since they put that on here, they're probably going to talk about that on the phone call. It looks like there was it looks like I mean, it should be in parentheses if it was negative. It looks like there was a positive operating cash for Q4, if I'm reading that correct. Available liquidity was $842 million, including $200 million of undrawn capacity of the revolving credit. I don't want to talk about the revolving credit. So basically $630 million still in cash. Again, as I said last night, they were using the APE sales in Q4 to offset the cash burn of $225 million or so that AMC is having right now. So our cash position stayed about the same. Discreet says earnings per share -14 corrected. I think that's adjusted net loss. I don't go by adjusted numbers. Adjusted EBITDA, adjusted net loss. That's when they take out a bunch of stuff to give you a better picture. We're not going to be, I mean, some places will report that. The company likes to focus on that. That's not the real number. So the net loss was 26 cents. We're not going to do the little dance where we only talk about what the company wants to tell us. What is going to be on the SEC Edgar filing is the not adjusted. That is that's a accountant's marketing phrase, but it's not the real number. The actual 10K is not posted yet. Lico says, I've asked before, but didn't really get a good answer. If APE is going to convert 1-to-1 to AMC, why isn't APE a better buy? The conversion is 1-to-1, guys. That is no dispute there. The only question that some of us have, the debate, is once they convert together, what is the combined price going to be, right? John Merriweather has stated in emails that I've seen that, and I even thought initially that this would be the case, that after the conversion, the new price would be AMC plus APE. In that case, and even if it, and in that case, it would be a slam dunk by APE, right? And then there's this other formula that people are putting out that I've been talking about more recently, that due to the higher float of APE, that you need to combine the market caps and then combine the market caps of AMC and APE, and then divide by the total number of shares. In which case, there still is some marginal profit that you can get by owning APE, right? There's still some marginal benefit. But the reason that it is not all the way where it should be is because of the risk of a lawsuit, the risk of something happening. So you make your own choices if you want to take that risk or not. Where it was a slam dunk, where the risk was acceptable, for me, was when it was really, really, really cheap. So right now, after hours, $7.40. It popped a little to $7.55 on the news. Dan says, if the Allegheny suit prevails, there will be a ton of lawsuits. Yes, there could be lawsuits from people who wanted the conversion, Dan. There could be lawsuits from people who, imagine if Allegheny forces AMC into a very inefficient, it's going to be, just imagine, we sold 500 million APE to just cover our cash burn in Q4. Can you imagine that being the ongoing thing, or the market's expecting, all right, to cover the cash burn for Q1, AMC is going to all of a sudden need to unload another 500 million APE. You're going to see it go from 65 cents to 60 to 55 to 40. Now they're going to need to sell 750 million APE to cover Q2 cash burn. Then they're going to need to sell 1 billion APE to cover the Q3 cash burn. Meanwhile, all of those are votes that are being sold to somebody really, really cheap. Who has the money to buy all those up every quarter? Not us. It's going to be institutions. You are literally voting to hand the company over to institutions, and they'll figure out a way to redo the vote to pass muster with any judge. And meanwhile, you've handed the company over with the no vote to institutions on the cheap. That's, in my opinion, how that will play out. All right, I'm going to put up this screen of adjusted earnings per share just so you guys can kind of see what I'm talking about, why I don't focus on that number. Adjusted earnings per share is defined as earnings per share from continuing operations. There may be other definitions. It just depends on what the company wants to take out. And oh no, this is this is not a SEC definition. This is from a company, NDC Health. Anyways, it still serves the purpose of why I don't talk about it. Adjusted earnings per share, this negative 14 cents, is not GAAP. It's not a GAAP measurement. It's not generally accepted accounting principles. It is something that I call accountant marketing. And it may not be comparable to earnings per share reported by other companies. But management often believes that adjusted earnings per share is useful to investors, analysts, and others because it provides a meaningful representation of the company's ongoing operating earnings, as it excludes certain items that management believes are not reflected of the company's core operating results over time. So, in other words, again, this is not the SEC definition. This is just standard boilerplate wording that came up when I did a Google search, and it'll be in AMC's wording too. This Google search pulled up NDC Health. So since it's non-GAAP, that is not it's not a number that I use when I track earnings per share. Yeah, Jeffrey says adjusted earnings per share is kind of like the different spins on inflation to make it sound good. Exactly. It is funny though, like later, the next day or an hour after any company releases earnings, depending on what the reporter or the data analyst that pulled the data in to have the reporter read, depending on what they went with, you can get wildly different numbers. You can have one channel or one website reporting negative 26 cents and another one reporting adjusted earnings was 14 cents. It can be very confusing to you, the viewer, who doesn't understand how companies release two numbers. It wasn't negative 26 cents and they made a mistake and adjusted it to negative 14. No, both numbers were released. One excluded certain costs, and so it looks better. Which one gets reported to you by a certain entity depends on the reporter and what they read and what they choose to present. Both are reported by the company. I do not use adjusted earnings per share. Let me see if I can spin this, get this webcast queued up here. You can access the website 15 minutes before start time. We got 7 more minutes to go. Danny says, Tony, what if Adam Aaron dilutes more than 400 million shares after reverse split, which he has on reserve now? After the reverse split, if it passes as written, there'll be 144 million shares. He'll have up to 550. So 410 million shares that he could issue, Danny. I would not expect him to do a share offering on day one of 400 million shares. And I also do not expect him to go back and try APE again. But, you know, the people who, the Chicken Little people that want to tell you, oh, I'm so mad at my investment. I'm so mad at Adam Aaron. Guys, he's going to dilute you 400 million shares, and then he's going to dilute you another 5 billion new apes because this was all planned since 2013, guys. Adam Aaron is the worst. He's the worst CEO ever. Why did I ever buy this company? You should sell, guys. I really. I'm just imitating some of the Chicken Littles out there. Maybe cruelly so, but he's not going to redo APE, and he will have the ability after the reverse split at a higher price to, I don't know, dilute 100 million, 200. He could do 410, but I don't think that he's going to go for the whole thing in the first round. The more he registers on a shelf offering or a private sale, the worse the stock price would react. So if he's smart, he'll parcel them out. But yeah, he could. 410 million. He absolutely could. APE was a failure. He's not going to redo APE. If he does, look, if you can't fucking get this company straight with 410 million shares and you're forced to do more APE, I mean, why am I even in this play at that point? Honestly. Ray Mill says, what are your thoughts on selling APE and buying AMC? Yeah, Ray Mill, unfortunately, I'm not giving any specific financial advice. I've talked when APE came out for many, many months about the opportunity to make money on arbitrage. But at this point, with the uncertainty of the lawsuit and the increase in price in APE, you're on your own at this point. The time to listen to this channel about APE was 2-3 months ago when it was getting really cheap. Paul says, did a false earning report come out? No. Remember, guys, there's earnings per share and then there's adjusted earnings per share, which is accounting marketing talk. There's 2 numbers. The only one I care about is the earnings per share. I do not report adjusted earnings per share. That is a spin on the data. It was negative 26 cents. Adjusted is negative 14. I do not report that number because that is accountants telling you their version of, after we took out certain stuff we didn't like, that isn't a core cost of the company, here's an adjusted number we'd like to offer to you. That's not the real number. But Tony, the cars are so pretty. Super 7 says, I sold APE right away when I heard they were going to use APE to dilute to raise money. I wish I would have been that smart, Supra. I mean, clearly I know that dilution tends to drive things down, but I underestimated retail's panic. And I failed where I really failed on APE on day one was realizing that institutions didn't need to hold it for their index funds, BlackRock and Vanguard specifically, and they dumped it. They all dumped it right away, and that's what drove the price of APE down. I should have been smarter about that. Lesson learned, but we were able to recapture some of that by buying APE when it got down below $1. So you beat me there. You did the right thing selling it on day one. All right, I'm gonna check the news on AMC one more time just to make sure that that I'm not missing anything here, because I see y'all are insistent that there was a revision.
In the fourth quarter, what we saw and what we'd expect to continue into the first quarter.
Yeah, I see someone, they're saying they're comparing the adjusted earnings of 14 cents to the expectation of 21 cents. I think that reporter may be in error. Let me check another website. Trust me, if the expectation was negative 21 cents and we beat it by negative 14 cents, you'd see the stock soaring. That would be a major, major beat. And I think that the reporters that are saying it was expecting negative 21 and it came in at negative 14 are failing to... The expectation was not the adjusted earnings per share. Negative 21 cents was the non-adjusted. I know this is confusing. Point Break, what's up? Point Break says there's a few hedgy trolls in here. Give me some names. We'll throw some torches up. AMC Q4 earnings. BF says some of you brokers still refuse to let retail buy APE, but they can sell it. That sucks. And I did talk with, quite a few people that had European brokers that couldn't vote. And as I looked at many of their brokers, they were not actually getting shares in their account. They were getting swap deals. So I don't know every country's laws, but one thing to check for with your broker is, are they selling you total return swaps, or are they actually selling you real shares? That is one thing to ask them. If you're buying swaps, you might not know it, and you definitely won't get a vote on a derivative product. Let's see what Yahoo says here. Well, they just reposted the press release. Benzinga is reporting the adjusted versus the estimate. Meredith saying Benzinga put out an article saying we missed on both. Big Ads, what's up? Yeah, see when I do not expect Adam Aaron to really address much about the lawsuit, but we'll see. It'd be nice if they said something, but don't expect them to say much due to pending litigation. The attorneys probably got them on a little bit of lockdown. Where can I put this? If you're just tuning in, remember, or maybe not remember, but maybe you didn't know, adjusted earnings per share is not the same as earnings per share. It's two different numbers. One is a marketing spin that is not generally accepted accounting principles. I do not report on adjusted earnings per share. When we look at the financial statements, when they're posted to the SEC website, that number will not be on there. The income statement is going to show the actual number, which was negative 26 cents. Why was the popcorn news released before earnings and not after the call? Probably, as I said, because I was not expecting Q4 to beat Q3 or Q4 a year ago, and they needed something to soften the blow of this being just a ho-hum quarter. The focus on today's call, guys, is going to be watch how good 2023 is going to be for this company. Movie industry is improving. The revenues for the company will be improving in 2023. The box office for the industry is going to be improving in 2023, and we have popcorn coming out as a new additional source of revenue. So I expect the spin on this call to be focus on the future. Q4 is behind us. This year is going to be better than last year. Brian says, a year ago, everyone said this play was not about fundamentals. Why is it now? Brian, very simply, a year ago, in 2021 anyways, we had $1.8 billion of cash in the bank. Fundamentals did not matter then, and we weren't in a recessionary environment with high interest rates where money is fleeing the stock market, right? We're not in 2021, guys. Wake the fuck up. You're in a completely different 2023 now. The entire market is different. There's not checks being mailed to people once a month from the government. AMC does not have $1.8 billion in the bank. They've got a couple quarters of cash left in the bank. It's not the same fucking play. The thing that it has going for it right now is high short interest, high cost to borrow. Why do you think that that is so? Why do you think there's high cost to borrow, high short interest right now? Because the company is running out of cash. It's not that hard to understand why those things are increasing. If you peel away from Reddit, peel away from the clickbait, focus on the numbers in front of you, of course they're increasing the shorts. The sharks are circling. If this company is not given the opportunity to raise money, then there's going to be some problems. And I'm going to be talking about that more and more. You're going to be sick of it. but I'm going to be the only one that's going to tell you the real shit. Everybody else is going to be focused on that 5-letter word. Please, Tony, just tell us about the MOAS, Tony. No, I'm going to tell you the facts. That if no catalyst happens, T plus 90, Evergrande, phase 6, whatever, if no catalyst happens, you're going to be watching a company get closer and closer to bankruptcy. I'm not going to just sit there and say, let's just let it happen. I'd rather them go bankrupt. I'd rather my investment just go to zero. Fuck that. The fight is in allowing the company to continue to fight, to continue to raise money. And if there is dilution and the price goes down, well, then you should be preparing. If you really like this company and you want to invest in it, you might want to think about if there was a dilution and the price went down. I'll be thinking about maybe buying some more if the price gets dropped down. But it becomes a long-term game at that point. It becomes a long-term game. Yes, Juicy. I already threw the pretty cars reference in there once. I'll be damned if I'm going to sit here and let somebody who's not one fucking time looked at a financial statement tell you that it's better to let the company go bankrupt than let the hedge funds win. Letting the company go bankrupt is letting the hedge funds win. You dumbasses. God damn it. I don't know what to say. I don't even know how to communicate with people with that mentality. When your emotions are dictating the words that come out of your lips, I cannot deal with people like that. I deal in logic. I deal in numbers. Super says, I watched your video about stocks that reverse split, the small cap, like $1 billion plus, not penny stocks. Yes, thank you. Many of them, as you saw in that example, after they had a chance to improve or something fundamentally changed at the company a year later, some of them did very well. Thank you for watching that video and bringing that point up. AMC is not a failing penny stock that has no income, that is wanting to reverse split because they're worried about getting delisted. That is not what this reverse split is about. This is about bumping the price up and lowering the float to try and extract maximum cash from a new offering. It is the smart play for the company. How it affects us in the short term, it might not be that pleasant. Dilution's never fun. In the meantime, between now and then, we got a lot of volatility. We got high cost to borrow. We got high short interest. How about we just put our grown-up pants on, stop bitching and moaning every day on Twitter and YouTube, and see what the fuck happens? The time to worry about dilution and the vote, that was going to be closer to March 14th. Now it's going to be April 27th because of the judgment, because of the preliminary injunction. Steve, will you still be streaming about this when we're in our 90s? If there's another run-up, guys, if there's another run-up, I'm not going to give you a price bracket, but if there is another run-up where I can sell my shares, I will not be talking about AMC after that. If you want to hold into the next run-up because you want that $1 million price target, then you can spend your years on those other channels. 3 minutes to go till the call. Who is this? Tanton 79. If the hedge want to sink AMC, let AMC run back to 72. They can't sink AMC right now. They can't sink it. They can. What they're doing by shorting it is hindering AMC's ability to raise money. That is what's happening right now. And guess what? Everybody who's voting no is doing the same damn thing. They are unwittingly hampering the ability of the company to survive. And apparently some of them are happy about that. They'd rather see the company go bankrupt. I don't know what to say to those people. I need a fucking cigar. It's almost phone call time. Conference call time. 1 minute. Keith says they should put out some kind of gold token from Hycroft in the bags. I think, there's going to be some publicity on the popcorn just because it's something new. Once that kind of fades, I think it'd be an excellent idea for the next marketing push to put some tickets in the popcorn bags. Movie tickets, discount coupons, Willy Wonka style. Jeffrey Jones, what's up? Thank you, sir. Will the judge know the results after the APE vote? Yes, I believe so. We will know the results of AMC, and I think that the results of AMC vote will also weigh on the judge's mind. Imagine if the common stockholders overwhelmingly or by a majority vote yes for the reverse split. Then the judge is going to say, well, your class action suit has no merit, sir. Case dismissed. You can fuck right off. But I don't know. I don't know what the common stock is. I don't know how they're going to vote. All right, let me unmute this and see if we still have music. Sound. Let me change my sound settings. Still have music.
Will the judge know the results of the APE vote? I feel like their decision should be independent, not influence, of the vote.
Sandro says, is that a cigar from Italy? This is a Alec Bradley American. I know you probably can't see it. The camera's... I don't know why the camera won't... It wants to focus on my face, not the cigar. So we will know the results of AMC. That should be disclosed on March 14th. We won't know the results of APE. But the judge will, yes. Jeffrey says if the apes vote no, the judge shouldn't be allowed to wash their hands of the ruling on whether AMC's approach was legit.
Is that cigar a Toscanino from Italy?
I'm not sure what that means, Jeffrey. If the apes vote no, okay, yeah, that's not going to happen. I'm sure the apes are going to overwhelmingly vote yes. The question is, what is the common stock going to do?
Capital markets and investor relations. Thank you, John. You may begin.
All right, here we go.
Thank you, Bikram. Good afternoon. I'd like to welcome everyone to AMC's fourth quarter and year-end 2022 earnings webcast. With me this afternoon is Adam Aron, our chairman and CEO, and Sean Goodman, our chief financial officer. Before I turn the webcast over to Adam, let me remind everyone that some of the comments made by management during this webcast may contain forward-looking statements that are based on management's current expectations. Numerous risks, uncertainties, and other factors may cause actual results to differ materially from those that might be expressed today. Many of these risks and uncertainties are discussed in our most recent public filings, including our most recently filed 10-K and 10-Q. Several of the factors that will determine the company's future results are beyond the ability of the company to control or predict. In light of the uncertainties inherent in any forward-looking statements, listeners are cautioned against relying on these statements.
Is that better on the volume?
No obligation to revise or update any forward-looking statements, whether as a result of new information or future events. On the webcast, we may reference non-GAAP financial measures such as adjusted EBITDA, constant currency, free cash flow, operating cash burn, and operating cash generated, among others. For a full reconciliation of our non-GAAP measures to GAAP results, please see our earnings release posted in the Investor Relations section of our website earlier today. After our prepared remarks, there will be a question and answer session. This afternoon's webcast is being recorded, and a replay will be available in the Investor Relations section of our website at amctheaters.com later today. With that, I'll turn the call over to Adam.
Thank you, John. Good afternoon, one and all, and thank you for joining us today. Let me add a very special welcome to the thousands of our individual shareholders who have been making it a habit to tune into these quarterly earnings webcasts for AMC Entertainment. 2022 marked another year of significant strategic, operational, and financial gains for AMC Entertainment. With our two announcements today on Q4 2022 earnings and of the launch of AMC Perfectly Popcorn at more than 2,600 U.S. Walmart stores, once again, AMC is demonstrating unmistakable progress along our multi-year pandemic recovery glide path. In my opinion, there are 5 reasons why AMC shareholders should be especially excited and smiling today. First, the increasing size of our industry as it recovers. Second, AMC's performance in Q4. Third, the fact that we are outperforming our competitors. Fourth, our agility in raising cash and reducing debt. And fifth, this morning's Walmart AMC Perfectly Popcorn announcement. First and overarching is the size of our industry itself, which is increasing. For 5 consecutive years prior to the pandemic, from 2015 to 2019, the domestic box office, which is all theaters, all brands across the United States and Canada, exceeded $11 billion. It was $11.4 billion in 2019. But then COVID came and brought our industry to its knees. And the 2020 domestic box office was only $2.2 billion. Down, as we all know, a breathtaking 82% year over year from the pre-pandemic level in 2019. Since then, our industry has seen a steady growth trajectory. The 2021 domestic box office was $4.5 billion, more than double that of 2020. And 2022's full year domestic box office of $7.4 billion was about 65% higher than 2021. The numbers again: $11.4 billion in 2019, falling to $2.2 billion, rising to $4.5 billion, rising to $7.4 billion. Based on the box office results so far in the first quarter of 2023, which is already up 44% year over year, combined with a much larger number of broader and deeper movie titles to be released in the coming quarters, based on what we know today, the 2023 domestic box office will almost certainly be significantly higher in 2023 than that of 2022. You all know that we finished 2022 and started 2023 on a very strong note with what is already the 3rd highest grossing film of all time, James Cameron's epic sequel, Avatar: The Way of Water. it really is a testament to the genius of James Cameron that he is responsible for 3 of the 4 highest grossing movies in the history of cinema. I digress for a moment to say thank you, Jim Cameron, and thank you to your producing partner, John Landau. It won't surprise you both to hear that you both are greatly appreciated by AMC and by the millions of AMC shareholders and the millions of AMC moviegoers. Please, please, Jim and John, keep making more movies. Speaking of more movies, that's one of the key stories of the coming year, 2023. The incredible Tom Cruise's Top Gun Maverick, which grossed more than $1.5 billion in movie theaters in 2022, and Avatar: The Way of Water, which has already grossed almost $2.3 billion in movie theaters in only 11 weeks, among many other successful movie releases, they all prove that moviegoers no longer are afraid to go to a cinema to watch a movie, as they once were afraid in the darkest days of 2020 at the height of the pandemic. Our problem now in generating attendance in theaters is quite different. Instead, it's simply that Hollywood has been releasing fewer movies of late.
By half.
Depending upon how you count, the number of major movies released in 2022 was somewhere between a third and a half fewer than the total number of such major films released in 2019.
But the crybabies want to blame Adam Aron for that.
Fortunately,
he needs to do better.
Finally, that is all changing. We currently estimate that 30 or more movies will gross more than $100 million domestically in 2023. That compared with only 18 doing so in the just completed 2022. That is an increase in 2023 of about 75% of the number of movie titles grossing $100 million or more. Let me repeat that. We are expecting in 2023 about a 75% increase in the number of major movie titles grossing $100 million or more.
Hell yeah!
Compared to last year.
Sounds bullish.
The second reason for our enthusiasm is that AMC posted much improved results for the fourth quarter of 2022. Naturally, we're pleased that AMC Entertainment easily bested consensus estimates for Q4 2022 revenue and for Q4 2022 adjusted EBITDA, as well as posting a beat on adjusted net income and EPS for 2022 Q4 after excluding for non-cash impairment write-offs. We are similarly encouraged that Q4 2022 revenue per patron of $19.98 was well above pre-pandemic levels, thanks to rising ticket prices and the consumers' continued predilection to indulge more at our concession stands in our high-margin food and beverage business. AMC's full year 2022 results represented our strongest year since pre-pandemic 2019, with 2022 results improving over 2021, which in turn were better than those of 2020. Indeed, in full year 2022, AMC saw our annual revenue increase by more than 54% year over year, and our adjusted EBITDA improved in a single year by more than $338 million versus 2021. That's an enormous increase. The third reason we are smiling today is that as the world's largest theater chain, we are outrunning our competitors. Number 2, Regal Cineworld, is in bankruptcy court because they essentially ran out of cash in September. By contrast,
thank you, Yuka.
AMC has been masterful in raising equity as needed, and we ended 2022 with over $840 million of cash in the bank or undrawn revolving credit lines. As for number 3 operator Cinemark, we encourage you to look at the Q4 metrics where we overlap in the United States. Average
will.
ticket price, AMC, $12.22. Cinemark, only $10 even, $12.22, $10. Food and beverage per patron, AMC, $7.76. Cinemark, $7.43. Total revenues per patron, AMC, $21.85. Cinemark, $19.
Y'all need to spend more on popcorn, guys. $7 per patron. I spend $100 when I go to AMC.
AMC, our film exhibition costs were 51% of our admissions revenues. At Cinemark, it was 58%. Our fourth marker of progress at AMC has been our ability to strengthen our liquidity profile and balance sheet. Over the last 12 months, AMC has raised approximately $314 million in gross cash proceeds, and we've also reduced the aggregate principal balance of our debt by approximately $390 million since the beginning of 2022. And as for that fifth reason for smiles today, the exciting popcorn announcement this morning, we are launching with Walmart. What an enormous vote of confidence that's coming to AMC from the largest retailer in the United States in the quality and consumer appeal of our new microwave and ready-to-eat popcorn. I'll come back to that and other essential topics after I return, but right now let's pass the call over to Sean Goodman, our CFO, to review our financial and operating results in more detail. Sean?
Thanks, Adam, and thanks to everyone for joining us this afternoon. 2022 was a year of growth and recovery for AMC. During the year, we welcomed 201 million guests to our theaters around the world. That's a 56% increase compared to 2021, and it's 72 million more guests than in 2021. This attendance improvement, coupled with strong admissions and food and beverage revenue per guest, translated into a $1.384 billion increase in consolidated revenue, representing a 54.7% increase compared to 2021. And likewise, 2022 adjusted EBITDA improved by more than $338 million to a positive $46.6 million. This compares to a loss of $291.7 million in 2021. Clearly, our recovery is continuing in earnest. Now, looking specifically at the fourth quarter of 2022 compared to the same period last year, the North American box office declined by 14.5% to $1.8 billion. And this was due to the relative strength of Spider-Man No Way Home in 2021 and the limited number of new titles available for release in October and November of 2022. Our fourth quarter consolidated revenue declined by $181 million, or 15.4% to $991 million. However, on a constant currency basis, consolidated revenue declined by 12.4% as we outperformed the overall industry because of strong operating performance metrics. For the fourth quarter, on a constant currency basis, total consolidated revenue per patron was $20.69. This is approximately 5.4% higher than the fourth quarter of 2021. And this was driven by admissions revenue per patron growth of 5.1% and food and beverage revenue per patron growth of 7.8%. It is worth noting that consolidated constant currency revenue per patron in Q4 of 2022 was 30.8% higher than pre-pandemic in 2019, indicative of the tremendous growth in revenue per patron during our recovery period. Domestic revenue in Q4 declined by 10.7%, with admissions revenue per patron increasing by 6.2% to $12.22, and food and beverage revenue per patron increasing by 7.7% to $7.76. In addition, other revenue per patron increased by 6.3%. In the international business, on a constant currency basis, revenue in Q4 declined by 16.6%, with admissions revenue per patron increasing by 2.2% to $10.70, and food and beverage revenue per patron increasing by 7.4% to $4.98. Other revenue per patron decreased by 8.8% as theater rental revenue generated during 2021 was...
I know it's hard to see on this screen, but if you want the after hours price, just look at this green thing on the right or up here in the top where it says after hours, $7.01. Also says it right here underneath 714, it says 701.
Optimized admissions revenue, including blockbuster pricing, are yielding positive results, and the increased adoption of our industry-leading AMC app and our marketing initiatives are all helping to drive overall revenue per patron growth. And this growth is further supported by increased premium format, or PLF, penetration, with PLF attendance representing 25.5% of domestic attendance in Q4 2022 compared to 19.8% in Q4 of 2021. And in our international markets, premium format attendance represented 18% of attendance compared to 10.7% in the fourth quarter of 2021. So clearly guests are increasingly appreciating the premium experience offered by our IMAX, Dolby, and AMC Prime offerings. Looking forward, we will maintain our focus on the guest experience that supports the strength of our key performance metrics, including 1, ongoing enhancement of our loyalty programs and the functionality of the AMC app. 2, innovative food and beverage offerings. 3, investing in providing the best possible sight and sound experiences through advanced laser projection technology and premium offerings such as IMAX, Dolby, and AMC Prime. And 4, growing revenue through diversification initiatives such as retail popcorn, the AMC credit card, renting out our theaters during off-peak times, marketing, and promotional initiatives. All of the above to be achieved while paying very close attention to our overall operating efficiency. Let's talk about the balance sheet now. We ended the quarter with liquidity of $843 million, comprised of $632 million of cash and cash equivalents and $211 million of undrawn credit facilities. During the fourth quarter, net cash used in operating activities was $33.3 million, and we achieved positive non-GAAP operating cash generated of $57.5 million. And we define operating cash generated as cash from operating activities plus total capital expenditures before debt servicing costs and before deferred rent payback. During 2022, we were active in the capital markets as we took actions to strengthen our balance sheet. In total, in 2022, we raised $229 million of gross equity capital. We refinanced $1.4 billion of debt. We extended certain debt maturities through to 2026 and beyond. And we repurchased $123.5 million of debt at an average discount of 43.7%. The net result is a $220 million reduction in the principal amount of interest-bearing debt outstanding during 2022. And during 2022, we also strengthened our balance sheet by repaying approximately $158 million of deferred rent. And this reduced our deferred rent balance to $157.2 million at December 31, 2022. You may recall that back in March of 2021, this deferred rent balance was more than $470 million. So over the last 21 months, we have lowered our deferred rent liability by approximately $313 million. All told, if we include the decrease in deferred rent, we reduced our liabilities by a total of $378 million in 2022.
People say, where is the money going?
In addition to that, so far in the first quarter of 2023,
paying back rent that they got
we have raised another
deferrals on, for one thing.
$7 million of gross equity proceeds. And we have reduced the principal balance of our debt outstanding by an additional $170.2 million through the exchange of debt into equity and capitalizing on opportunities to repurchase debt at a discount. These actions in the first quarter of 2023 so far take our total debt reduction to $548 million when we include the reduction in deferred rent liabilities, and our total equity capital so far raised to $314 million. Note that during 2023, we plan to further reduce the deferred rent balance by another $75 to $100 million, and this will reduce the liability to approximately $60 to $80 million by the end of 2023. Regarding capital allocation, our priorities remain unchanged. One, we need to maintain sufficient liquidity to manage through the recovery phase of our business. Two, we need to strengthen our balance sheet by extending debt maturities, reducing debt, and reducing associated interest costs. Three, invest in our business to continue to enhance the guest experience. And four, opportunistically pursue value-enhancing initiatives, including those that lead to diversification of our business and revenue streams. Having the flexibility to raise equity capital allows us to opportunistically take critical actions to strengthen our balance sheet and at the same time successfully navigate through the ongoing recovery of our industry. For these reasons, I would like to take this opportunity to urge shareholders to vote in favor of the proposals that will be voted on at the upcoming shareholder meeting on March 14th. These proposals are designed to protect the long-term value of AMC equity and provide us with the flexibility necessary to ensure a successful recovery from the ongoing impact of the COVID pandemic. Our capital expenditure, net of landlord contributions, was $69 million in the fourth quarter of 2022, and we finished the year with a total net capex spend of $182.1 million. And similar to 2022, looking towards 2023, we expect our capital expenditure to be in the range of $150 to $200 million. Actively managing our theater portfolio continues to be a priority as we add new high-performing locations and eliminate low performers, all with the goal of improving our guest satisfaction and enhancing our overall profitability. During the fourth quarter, we added 5 new theaters and we closed 9. This brings the total number of locations closed since the pandemic began to 115, and the total new locations opened to 54 for a net reduction of 61 locations. The combined 54 new locations continue to substantially outperform the 115 closed locations prior to their closing.
I'm going to keep on telling y'all that. You say they're not doing anything.
Expectations.
They are doing shit.
Forward, we're optimistic about the future and the opportunities to strengthen and diversify our business while continuing to enhance our financial position. So with that, I'll hand the call back over to Adam to review some exciting recent announcements and provide an update on our strategic initiatives, including our upcoming stockholder meeting. Adam.
Thank you, Sean.
It always tanks when Sean talks, guys. Get Adam back on.
We're all smiles today. But by no means are we out of the woods yet. We will need to remain smart and action-oriented to successfully chart our way through what are still COVID-impacted waters. But clearly, we have been and are now making great progress. And while we have much more work ahead of us still, my ongoing conversations with our studio partners, including some as recently as this weekend, buoys my optimism that more movies are indeed headed to theaters, and that the value of theatrical exhibition is clearly recognized and internalized by the heads of every single major studio. As the leader of AMC, I am proud that we have resiliently weathered many a storm over the past 36 months. A storm first of the virus itself, then the threat to exclusive theatrical windows. More recently, the conviction held by some that streaming services would win out over theaters, and all through it was the concern that there would not be enough cash in the coffers for AMC to outlast all that we had to stare down. What's more, there was the added complexity for us of doing something well that few, if any, companies ever thought about before: how to adjust to a whole new cadre of millions of individual shareholders taking ownership of our company. Fortunately for us, the people who predicted that we could not weather the storms were all wrong. And more fortunately for us, those new retail investors their passion for AMC saved our company as they provided us with the cash resources we needed to survive. They also flooded us with some truly great ideas, including one of my personal favorites, that we should sell popcorn to the home market in what is, after all, a multi-billion-dollar category. This morning's exciting news announcement that the retail launch of AMC's microwave and ready-to-eat perfectly popcorn is at hand, and exclusively with the nation's largest retailer, Walmart. It keeps a promise to do so that I made 16 months ago to our shareholders, and is yet another example of AMC's powerful commitment to innovation. Beginning on March 11, just ahead of the Oscars telecast on March 12, AMC's ready-to-eat popcorn will be available exclusively at hundreds of Walmart locations on much sought-after featured end cap displays. In the weeks that follow, AMC Perfectly Popcorn will hit the shelves again exclusively at more than 2,600 Walmart stores in the United States, with 3 varieties of ready-to-eat popcorn in the following flavors: classic butter, extra butter, and for those seeking a lower sodium solution, lightly salted. The ready-to-eat varieties are expected to be priced at $3.98 per bag, plus tax, and they all offer the authentic taste of real AMC movie theater popcorn to be enjoyed anywhere. Then, our microwave AMC Perfectly Popcorn will become available at Walmart. Again, in the same 3 flavors: classic butter, extra butter, lightly salted. And they are expected to retail for $4.98 plus tax for a 6-count box. As an added and unique benefit, the extra butter microwave boxes will include 6 packets of additional buttery toppings
butter
that eaters at home can use to slather all over their popcorn, truly replicating that ultimate AMC movie theater popcorn experience.
Horrible butter on your microwave popcorn.
This first-of-its-kind approach by a theatrical exhibitor to distribute ready-to-eat and microwave popcorn at retail outlets all across the country further differentiates AMC as the undisputed leader in this industry and greatly extends the visibility of the AMC brand. Another idea that came to us from our investors was to sell AMC and movie-themed merchandise. We are doing so now across the United States and online. As every major movie releases, as every big tentpole releases, we have something themed for that film. And it's but one of many such examples of success here are, if you can believe it, Ant-Man popcorn helmets have been quite popular, selling almost $2 million worth in less than 2 weeks. This has proven to be such a successful concept that we're about to launch the same activity across our theaters in Europe. Thank you, retail shareholders, for the idea. Next on the innovation docket, is the launch of our new co-branded AMC Entertainment Visa card, coming soon to a wallet or a purse near you. It's been designed to drive increased AMC brand loyalty, along with incremental attendance to our AMC theaters, and should generate attractive financial returns with very little risk to boot.
All right, so he's saying credit cards are going to
We recently announced a potentially important
provide financial returns. I want to hear more about that.
We are testing sightline seating at AMC in some of our theaters in New York, Chicago, and Kansas City. New York and Chicago because they're big cities in the United States. Kansas City because we're headquartered here, and we ourselves want to walk into our theaters and talk to our guests and gauge their reactions directly and firsthand. The test is being done for a potential nationwide rollout later in 2023. With sightline seating, as you know if you saw the release, we are charging a slight premium for the most popular seats in an auditorium, but discounting the prices of less popular seats closer to the screen up front. This is in line with how other sellers price their seats for live theater, for concerts, for sporting events. It's also how we've been pricing movie theater tickets in Europe for many years. We do understand, however, that this is a substantial change to the status quo for U.S. moviegoers, so we'll be watching very closely how moviegoers react to the changes that are being tested right now. We will report back to you in future calls what we're seeing in the tests, and we look forward to this thing working well for the benefit both of our moviegoing public and for AMC. AMC's ability to continue to raise capital during our ongoing recovery makes all these potentially transformative innovations and new actions possible, and it is crucial to our future success. To that end, I'd like to utilize the remainder of my formal remarks today to discuss the upcoming March 14 special stockholders meeting and the importance of the proposals on which our shareholders are already voting.
Tell us, Adam.
Last August, we issued 516,800,000 APE preferred equity units as a dividend to holders of our AMC common shares on a one-for-one basis. The primary goals of issuing the APE dividend was to provide AMC with a new currency that could be used to strengthen our balance sheet by generating cash, bolstering our liquidity, to reduce our debt, and to allow us to grow. And that is precisely what the APE units have done. Since September of 2022, the creation of APE units resulted in AMC successfully raising $314 million of gross cash proceeds and allowed us to reduce the principal balance of our debt by more than $221 million, most of which was profitably repurchased at a substantial discount. Indeed, AMC is unequivocally a stronger company today as a result of the creation of the APE dividend, and it's allowing us to raise cash and reduce debt. I might add that came amidst a lot of press speculation that we'd be unsuccessful in doing so. To the naysayers and doomtellers, you know what I say. Choke on that.
His choke on that means they're not going bankrupt. Does not mean what a lot of people on Twitter and Reddit want it to mean.
APE preferred equity units have consistently traded at a mysterious and substantial discount to AMC common shares. This discount creates inefficiencies that increases our cost of capital and causes unnecessary and preventable dilution. So, after careful thought, the AMC Board of Directors is presenting important proposals for shareholders to vote on at the upcoming special meeting on March 14, 2022. These proposals are designed to protect the long-term value of a shareholder's investment in AMC while still providing AMC with the flexibility necessary to continue along our recovery trajectory in a challenging environment. As you already know, the two key proposals are: 1, increase the number of authorized AMC common shares from 524 million to 550 million, and combine the AMC common shares and 8 preferred units. Second, to effect a reverse stock split of 1 share for every 10, which together with the increase in authorized common shares permits that automatic conversion of 8 units into AMC common stock. Our board and I strongly believe that it's in the best interest now of AMC shareholders to convert 8 units into AMC common shares, thereby simplifying our capital structure and eliminating the gap between the prices of APE units and of AMC shares. As AMC's single largest individual shareholder, with millions of AMC shares and APE units, I have a vested interest in the outcome of this election, because my net worth rises as AMC strengthens, and my net worth falls as AMC gets weaker.
And Sean's got a lot of RSUs he wants to sell.
Some 3.7 million AMC shares or 8 units.
Sorry.
And have a further economic interest in an additional 4.5 million APE units or AMC shares as a result of granted but unvested stock. In total, I have some 8.2 million AMC shares or AMC units. You know what that means? It means that my interests are directly aligned with those of our shareholders. I am not some hedge fund plant or Trojan horse, as a few of the more bizarre conspiracy theories go.
You hear that, Al?
I'm on the side of the retail
Al,
investor
he's talking to you.
because I am
You
myself
faceless, commentless
a
wonder.
retail investor. And I'd like to share with you the 7 reasons why I have voted yes, voting for the proposals that are being recommended by the board. Before I do so, however, I should point out that litigation has been brought in the Delaware Court of Chancery, attempting to block
All right,
our shareholder proposals
here we go.
and your right to vote on them. We believe such litigation is without merit, that
Me
our
too.
actions have been totally lawful and
Yep.
consistent with our charter,
Yep.
and we will vigorously defend our position in this matter. The court
Good.
has ordered that the March 14 vote shall take place on schedule, but that any implementation action resulting from the vote be held in abeyance until the court rules on the substance of the claims being made. So the vote is on, and it is on now. I urge our shareholders to vote now so that your voice can be heard.
Please vote. No matter how you vote,
Because
just
I think
fucking
it's the
vote.
right thing for me to do and for you to do. I urge you to vote for the proposals with me. Here's why. First, a more resilient AMC. Having the flexibility to efficiently and opportunistically tap both the equity and debt capital markets results in a more resilient company. Were it not for our ability to have raised both equity and debt over the past 3 years, AMC would not have survived the pandemic that caused a material decline in our business activity. Second, reduce capital raising inefficiencies associated with APE units trading at a discount to AMC shares. Converting APE units to AMC shares will result in a single price for all AMC equity. This single price eliminates the inefficiency inherent in the discount between APE units and AMC common stock, and will allow AMC to more efficiently raise equity capital at the most attractive terms in the future. Third, enhance the ability to raise cash and increase liquidity. Well, I believe AMC is currently in a strong liquidity position with more than $840 million of available liquidity at the end of December 22. The ability to efficiently raise additional liquidity when needed has proven to be critical for this company in the past, and depending upon the path and timing of recovery, may be critical to our survival again in the future. Fourth, strengthen AMC's balance sheet. AMC's balance sheet is expected to strengthen over time as the box office grows. At the same time, as we have demonstrated in recent months, there continue to be attractive opportunities for us to use available equity or equity proceeds to buy back debt or exchange debt for equity at a discount to face value, which greatly benefits shareholders. Fifth, simplify ownership in AMC. Consolidating ownership of AMC into one single class for all shareholders eliminates the added complexity that some brokerages have imposed on their clients in the holding or trading of our preferred equity securities. In addition, the single class of equity eliminates the potential for hedge funds or other investors to engage in arbitrage trading strategies between the APE and AMC securities. Sixth, position AMC to transform into a stronger, more diversified company. A single equity class will better allow us to pursue attractive shareholder value creation opportunities, to diversify and to transform our business. And last, seventh, create long-term value for AMC. A vote for the resolutions is a vote in favor of the long-term value of AMC. Since we announced our intention to hold a shareholder vote to convert APE units into AMC shares, the total equity value of our company has increased. The other matter of consequence being discussed at the March 14 shareholder meeting is the 1-for-10 reverse stock split. So let me quickly address that topic. If you have 10 $1 bills in your pocket and you exchange them for one $10 bill, you still have $10 either way.
No, Adam, I lost 90%.
If you have 10 $10 bills in your pocket and you exchange them for one $100 bill, you'd still have $100 either way. This reverse split in and of itself should be neutral. However, for a variety of reasons, including the technical listing rules of stock exchanges, we think it's unwise for our shares to be trading at levels in the single digits. The reverse split also creates room to allow for the full conversion of APEs into common stock, which we also think is a good idea for each of you, as I previously explained, and creates the capacity for common stock to be issued as equity in the future. In my view, I believe that there's no compelling argument why our shareholders should generally be averse to a reverse stock split. As I stated earlier, having the flexibility to continue to raise capital as we navigate through our recovery is crucial to AMC's future success and has thus far kept us from the fate of several of our competitors who have been forced to seek bankruptcy protection. Were we to be somehow deprived of this cash-raising capability, our future may not nearly be so bright as it appears currently. Indeed, our future could turn quite bleak in just a blink of an eye. I cannot emphasize enough that while things are looking up now, our success could literally vaporize in an instant if we misstep. The reason we have succeeded to date is that, in our opinion, we have threaded the needle perfectly heretofore during this pandemic. But make no mistake, the need to continue to thread the needle perfectly going forward is unchanged at AMC Entertainment. Fortunately, we're pretty good at this, and we've been at it a while, and we know what we're doing. I know I have about 3 or 4 million friends out there who like to give me advice, so I'd like to remind you we've done a pretty good job of stewarding this company during tough times. Avoiding a dire fate is a commitment that I personally made to our shareholders in the earliest days of this global pandemic, when our revenues went to zero overnight and stayed there for months. I remain steadfast in that commitment to you today. Every action that AMC has taken is in direct support of that commitment, despite what the naysayers or the short sellers or those who wish us harm would have you believe. Our mission now is clear. And it's the same exact cause that so many of our shareholders joined and embraced way back in the dark days of 2020 and early 2021. You all remember the hashtag, Save AMC.
No, a lot of them forgot that hashtag, Adam.
Let's now move to questions, both from our industry analysts and from our shareholders.
Their patience is running thin. They forgot the hashtag.
Let's start with some questions from our shareholders. There are a number of questions coming through about the upcoming shareholder vote that we just spoke about. Here's a good example. What are the implications if the vote passes? And what are the implications if the vote does not pass?
So if the vote passes, it's my expectation that this ridiculous gap between the price of an APE and the price of an AMC share will go away. And when I say it's a ridiculous gap, folks are the same thing. They have the same economic rights. They have the same voting rights. Why should an APE be trading at a third the price of a common share or a seventh of the price of a common share as it was just 2 months ago? If the vote passes, I think what you'll find is that this discounting of the APE goes away. What that means is that we'll be able to raise capital on, in my opinion, more attractive terms. Similarly, what will happen if the vote passes is there'll be a 1-to-10 reverse stock split. So you'll stop seeing the share price of AMC floating around, $3 or $4 or $5 a share. The simple math is it should multiply by 10. Where it goes from there, up or down, that's a function of market dynamics. But it is simple math. You'll be trading 10 shares for one, which mathematically should be priced 10 times higher. If the votes that we're voting on at this shareholder meeting do not pass, it's true that the reverse split won't happen. But
Thank you, Steve.
What is true is that the status quo doesn't change, which means that there still will be APEs and there still will be AMC shares. The APEs will continue to trade at a discount, I would guess. No one has a perfect crystal ball, but that's been the experience since August. And since our ability to raise capital is tied only to the price of the APE, if the APE continues to exist, it would seem that we wouldn't be blocked from raising capital, but we'd be raising capital on much less attractive terms.
Sounds like he's using my talking points.
More dilution of the stock that is entirely 100% preventable if a majority of our shareholders vote yes.
So here's another question related to this. It's related to the reverse stock split. And basically it says, why do we need to do a reverse stock split? Can't we just convert APE units into AMC without doing this reverse stock split?
Good question.
We could, but as I said in my earlier remarks, the share price would hover in the single digits. And there are certain technical listing rules on stock exchanges. We don't think it's a good idea for our stock to be trading in single digits. And since we're going to have a shareholder vote anyway, it seemed logical to us to resolve both questions at the same time.
I'll talk about that after the call.
It's expensive to call these special meetings of shareholders. It costs millions of dollars to do so. We'd rather get them both done now than have to deal with a reverse stock split at some point in the future.
We have a number of shareholders asking about their proxy materials. One example here is, I have not yet received my proxy materials from my broker. What do I need to do to be able to vote, to get my proxy materials and be able to vote?
As Bill Clinton famously said in the 1990s, for those of you who are old enough to remember the 1990s, I feel your pain. My AMC shares and APE units
I
are
feel
at
your
4 brokerage
pain.
firms, and I've received the voting materials from 3 of the 4 firms, but not the 4th. So if you have not heard from your broker, you should do what I'm about to do. Call them. Explain to them that there is a March 14 shareholder vote, that you own shares or units, and that you'd like to cast your vote, and they should get you a proxy. If your broker is not acting in response to your question quickly enough, email or call our proxy solicitor, D.F. King. You can reach them at an email address, amc@dfking.com, amc@dfking.com. Their phone number is 800-859-8511. All the information I just gave is for our U.S. shareholders, probably our Canadian shareholders, and international shareholders in many countries. But we are all aware, painfully, that the brokerage firms in some countries, especially in Europe, do not facilitate shareholder voting. And if you're with one of those firms, there's not much you can do other than put your shares in a different broker who would allow you to vote at future shareholder meetings.
And there's a question here about the lawsuit that you mentioned in your prepared remarks. It says it has been reported that AMC is defending against 2 lawsuits relating to the issuance of APE units. Is this true, and can you elaborate?
Yes, litigation's been filed. We think it's misguided. We believe that all the actions we've taken are lawful. We think we have the merits in this case. It's consistent with our charter. We will defend our position vigorously, and we are encouraged that the Delaware Court of Chancery has allowed this March 14 vote to proceed on schedule.
There's some questions here about our loyalty programs, and I'll just read a few of them to you. Does AMC have any plans to revise loyalty programs and A-list memberships? For example, what about family memberships, partnerships with streaming companies, maybe a lower price for memberships with restrictions to limit frequency of attendance, etc.?
So those are all good questions and good ideas. We have been and are studying them all. The 2 of the most important marketing programs we have are AMC Stubs and especially AMC Stubs A-List. About half of our total clientele in the United States participates in Stubs, and about 15% of our total activity in the United States comes from A-List members. These are very important programs. We're constantly reviewing them for possible changes and improvements. There's nothing immediately on the horizon that would change either program, other than AMC Visa Entertainment Card that's going to be added, an AMC Entertainment Visa Card, yeah, I said it right. AMC Entertainment Visa Card that'll be coming as part of the Stubs program that will allow Stubs members to earn even more Stubs points, both when they spend at our theaters and when they spend away from our theaters. But keep the good ideas flowing. We continue to think hard about what's the best way for AMC to approach the movie-going public.
Question about our theater footprint. Does AMC plan on opening new theaters in areas such as perhaps South Carolina or other states where AMC has a limited presence?
I can't make a specific comment about South Carolina, but
what about Maine for Maggie?
At least South Carolina has one of our theaters. We have none in Hawaii. We have none in Alaska. We have none in Mississippi. I don't think we're in Vermont.
You're not in Maine.
But we do have the largest national footprint.
Sorry, Maggie. You didn't even mention your state.
I think we're in 43 or 44 states on the District of Columbia. We have a sizable market share in the largest cities all across the country. Plus, we have a big platform of theaters, even in smaller rural markets. We're always looking to add theaters. And you said earlier in the call, Sean, that we closed over 100 theaters that were not performing during the pandemic.
I'll talk
We
about
opened
the
up
reverse
54 new
split
ones.
after this call's
And the
done.
54 new ones were producing to the bottom line far more than the 100 that we closed. I think 10 of the 54 probably produced far more EBITDA than the 100 that we closed. So we're always looking to grow. We can grow by adding new build theaters from the ground up, or there's also the opportunity for us to inexpensively add into our system theaters that may have been opened by other operators who have faltered during the pandemic. Several firms declared for bankruptcy and over the last 3 years and shed a lot of theaters. And we picked up a bunch. As you know, we picked up about a third of the ArcLight circuit, which was headquartered in Los Angeles. We picked up more than half of the Bowtie circuit that was headquartered in Connecticut. Our eyes continue to be wide open. I do believe that there will be a continued opportunity for AMC to add theater locations quite inexpensively. And I might add, to do so sometimes requires money, which is why it was so very helpful to us that we have raised over $300 million of cash from August through January. The more cash in the bank, the easier it is to make the decision to add theaters and grow.
There is a huge amount of interest in the retail launch of AMC Perfectly Popcorn. Let me read to you just a few of the questions. Can you talk more about the opportunity for AMC in retail popcorn? When will AMC Popcorn be available in the US nationwide? Will AMC Popcorn be available to purchase online through the AMC website? Will AMC Popcorn be available to purchase in Canada and maybe in Europe?
I'll talk about those, Steve, yes.
Yes, the enthusiasm and excitement for AMC Perfectly Popcorn at home is real. I see it on Twitter. When I look at the readership of the tweets I've been putting out recently on popcorn, they're sky high. The likes are sky high. The retweets are sky high. The comments back to me, every single one of which I read, by the way. I got like 4,000 or 5,000 inbound messages on the popcorn tweets recently, and I read them all. Boy, they make me excited.
That's a long potty break, Adam. Read them all.
We launched March 11th, Oscar weekend, with end cap displays at Walmart. They're almost impossible to get, and Walmart volunteered them up to us because they're excited about popcorn. And by late April, we'll be at more than 2,600 Walmart stores. That's more than half of all Walmart locations in the United States. We will have a website where you'll be able to go to find out at what locations you'll be able to actually pick up boxes of microwave popcorn or bags of ready-to-eat popcorn. We are going to sell on Walmart.com, which of course is nationwide. I would expect it will sell on AMC Theaters.com. We're discussing whether or not we should sell microwave boxes of popcorn at our theaters. Like, it's all new. We haven't started yet, and the interest level is very high. This is a nice position to be in when you're launching a new product. Let's put it this way. We're setting up our production plants to make millions of bags and microwave pouches of popcorn. We think this is a big opportunity for us. Right now, we're going to launch only in the United States. Canada is a possibility. If we did it in Europe, we would probably not do it under the AMC brand. We would do it under one of the Odeon brands. Our cinemas operate with their own distinct brands in several countries across Europe. But right now, you crawl before you walk before you run. We're going to start in the United States and see where it goes from there.
Thanks, Adam. We continue to receive a very large number of really terrific suggestions from our retail investors.
Thank you, Maggie.
To grow and diversify.
I'm going to keep after him on Maine, Maggie.
And I want to say that we, as a management team, review these, we investigate these. So please, investors, keep these ideas coming. I think with that...
Let me just respond to
Sure.
that. What an oddity, a company that actually listens to its investors. How about that for a change? Yes, sir. You want to go to a question from an analyst, maybe?
No questions.
We're already running a little bit long, but if on this call today, but if any investor wants to ask, go ahead.
Operator, we can go to questions from analysts.
Thank you very much. We will now be taking live questions. If you'd like to ask a question, please press *1 on your telephone keypad. A confirmation tone will indicate your line is in the question queue. You may press *2 if you'd like to remove your question from the queue. For participants using speaker equipment, it may be necessary to pick up your handset before pressing the star keys. So we have time for only one question, and we take question from the line of Eric.
One
Wood
question.
with B. Riley Securities. Please go
Brent,
ahead.
thank you, Brent.
Hey, good afternoon, Adam and Sean. I appreciate it. I guess, as much as I'm looking forward to the popcorn business being a separately reported segment, I have a couple questions on the core, the theater business. I guess first off,
Hey, Eric, not to interrupt, but you know what you're going to like more than how we report the popcorn results? Eating the popcorn. It's really good. We actually worked for a full year on the flavor profile of these products. They're really great.
I'm looking forward to enjoying it with the Oscars. On the Sightline seating plan or program, I guess obviously it makes sense given what we've seen with other entertainment businesses. I guess, what are your thoughts on where you see the biggest benefit coming from? Is it the premium on the better seats? Is it filling up the less desirable seats now that they're priced lower? Or is it that loyalty members don't pay the premium seat charges? Is the benefit driving more loyalty membership into that program?
And the answer is all of the above. You've got the three benefits of the concept, right? We can discount up front, we can charge a slight premium in the middle, and we don't charge when I say the middle, the dead center of the auditorium where most people want to sit. And if we don't charge that premium and impose it on A-listers, that's just another big value increase for A-list members, which should make more people want to be A-list members. So all three have the ability to drive improvement. And some people have looked at this as a price increase, which of course it is on day one. But what's really interesting is that we are in inflationary times. And inflationary times cause cost to rise. And without making any comment about what AMC is going to do, because it's not legal to talk about pricing prospectively, but companies facing inflationary pressures tend to raise prices. Not talking about AMC. Under the
Not financial advice.
Structure of our industry, if we wanted to raise the price in a theater, the only choice we had was to raise the price on all the seats in the theater. And so what's one of the many benefits of Sightline, other than the three that you mentioned, are that if we feel the need to raise prices, we might only do it in the most popular seats in the auditorium and actually hold the line and not raise prices on other seats in the auditorium. So it's actually a way of, well, it is a way of increasing the price now. It's a potential way of preventing a price increase later on. And then there is, in fact, the opportunity to discount up front. I'm telling you, I've been looking at what we call heat maps, which are what seats are booked for a particular movie. And nobody sits in row one in a movie theater. It just doesn't happen. It could be opening night of Star Wars. Every seat in the auditorium in row 3 to 18 is booked solid, and row 1 is empty. And it really is, there is a possibility here that by discounting the price up front, we might be able to expand the movie-going market to more price sensitive.
Just take those seats out, Adam, and put in a dance floor.
Perfect. That's helpful, Adam. Thank you very much. Appreciate it.
Thank you. Ladies and gentlemen, we have reached the end of the question and answer session, and I would like to turn the floor back over to Mr. Aaron for closing comments. Over to you, sir.
Thank you, operator. To everyone on the call, thank you for being with us today. Today was a good day for AMC. We reported results that were unexpectedly positive. We introduced our popcorn line, and we've had a lot of discussion about the importance of the March 14 shareholder meeting that will simplify and strengthen the capital structure of this company going forward. Thank you for joining us today. There are a lot of big movies coming out. We look forward to seeing you at our theaters sometime soon.
Thank you very much, sir. Ladies and gentlemen, this concludes today's teleconference. You may disconnect your lines at this time. Thank you for your participation.
All right, Q&A time, recap time. I'm going to get some of your questions answered. I'm going to start off by saying anybody who wants a conspiracy question answered about tokenized shares or naked shorts, you can just go ahead and leave the chat now because we don't do that here. Go back to the clickbait channels, go back to Reddit. I'm here for serious adults who want to talk about data and real market dynamics. We can talk about short interest. We can talk about cost to borrow. We can talk about threshold list. All the conspiracy people, just go ahead and leave right now. I'm not going to talk about that bullshit. There's plenty of clickbait channels to fill your heads full of nonsense like they have for the last 2 years. Go back to them. Ask them those questions. Ask them to give you the evidence of stuff they've never been able to prove in the last 2 years. I'm not going to do it here. Not going to hold your fucking hands. Now, threshold list. Why didn't Adam talk about threshold list? Guys, a stock can be on the threshold list for 3 months, 6 months, a year. It is evidence of entities, institutions having trouble fulfilling, of getting delivery, providing delivery on shares. We already know it's hard to borrow. We already know that the short interest is high, the cost to borrow is high. But there are ways, you don't see the details on the threshold list. You don't know, there could be multiple entities that are failing over different days, and they could be fixing their fail, they could be sham resetting it, they could be borrowing from the obligation warehouse to close it. There's all sorts of ways to close out fails. And then 4 days later, someone else fails. Every time someone fails, your days on the threshold list get extended by 5 days. So this could be a repeating pattern for many months. We already know from the high cost to borrow and the high short interest and the hard to borrow that they are having problems. This is good for us, but you can forget about counting days on the threshold list. That is something to tweet about, something to make videos about for other channels. There's not going to be any T+13 or T+35 that you will ever, ever, ever hear me talk about because it's nonsense. You don't know the background of who's cleaning up their fails, and then they fail again later. It's not worth me tracking, honestly. It's good enough for me to know that that we're on the threshold list. That's about all I care about. Until you see the data, and you never will, go yell at Gary Gensler to provide transparency on the threshold list. Who's on it? How often are they resetting their fails? How many entities are on the threshold list? That's what you need to see, and we can't fucking see it. But again, I've said this many times. If institution A fails on day 1 and cleans it up on day 2, you'll still be on the threshold list for 5 days. And then if institution B fails on day 5, now you're going to extend the threshold list to 10 days. And if institution B cleans it up on day 6, but institution A fails again on day 10, now you're going to be 15 days on the threshold list. We don't see that data, so I can't tell you if anything on the threshold list is meaningful. It is meaningful that we're on it, period. They're having problems. That's good enough for me. There's nothing else to talk about, honestly. Unless we had the actual data on the list, go bug Gary Gensler. Don't bug Adam Aron. He doesn't fucking know. Someone asked me in the comments last night, did Adam Aron create APE without the consent of shareholders just to raise cash? Yes, he did. Right? The board, the executives are worried about running out of cash. We did not approve because they had $1.8 billion in 2021. We did not approve dilution. I did not approve it then. I was vocally against it. They had $1.8 billion. The economy was strong. The stock market was strong. The ability to get a second run up was strong. And then November 2021, the recession started hitting. The Fed started raising interest rates. Now we're damn near 18 months past November 2021. The company's getting run down in cash. And as an investor, if you're holding AMC, you have two things to think about. Do you want to watch the company run out of cash and have all the debt holders call all the loans due and force a Bed Bath & Beyond type bankruptcy scenario? Do you want that to happen? Vote no. If you vote no, then the company will continue raising cash with APE inefficiently, $200 million a quarter, $300 million a quarter, just enough to offset that cash burn. Very inefficient. If you vote, I'm going to talk about everything, so hold all the shills and trolls in the chat. Give me a second to get it all out. If you vote yes, and they reverse split and increase the price, the float gets lowered, the price is higher, they have the ability to generate cash at a much higher rate. But yes, that will also be dilution. And what do we know that dilution does? It tends to drive the price down. Am I worried about the reverse split driving the price down? I personally am not really worried about that. Reverse split is just a math fugazi. It doesn't change anything. Why do penny stocks fail after a reverse split? Because they were already trash. They were already going down. The reverse split is just an artificial way to pop the number up, and then it just continues down that same path. Reverse splits on penny stocks, that's a trash company. It was going to keep going down no matter what. That's why I always tell you, don't fucking buy these penny stocks, and don't believe the bullshit about people saying buy it before the reverse split. No, it's a trash company. AMC has increasing revenues, box office is increasing, the industry is recovering, but it is troubled, and they need to raise cash. So you're either going to vote no and dilute with APE, or you're going to vote yes and they're going to dilute with AMC. I think the company, they need to raise cash. The executives are worried about running out of cash. Could that be painful for the common stockholders? Any dilution is going to be painful. When they're diluting APE, I know you guys want to stick your heads in the sand and say, but that doesn't affect my AMC shares. That's horseshit. If you think diluting APE doesn't affect your AMC shares, you are misinformed. If you hold this stock, if you choose to hold this stock, you are choosing to hold a company which is actively diluting because they need cash. Just get that through your head. The number one thing that you can do to ensure bankruptcy in this company is not allow them to raise cash. And then for sure your investment's going to zero. You're going to be in a Bed Bath & Beyond situation. And yes, this sounds harsh. Kathy is saying in the chat, it sounds harsh when we say this, but if you don't like that, get the fuck out of the stock. If you don't like the management, get out. I would never hold more than a momentum trade overnight, couple days. stock in a company I don't believe in. We are holding a troubled company, a company that is going to have losses for the foreseeable future. That's the stock you're holding. Now, could there be a squeeze? Could there be a squeeze? Yes, there could be when you have high cost to borrow, high short interest. If there were a catalyst before the vote or before the conversion, there's a lot of unknowns right now. We got also Cineworld and Regal potentially going bankrupt, maybe closing some locations or all of them, which will improve AMC's outlook for the rest of 2023. If that were to happen, you know, pray to the gods that Cineworld and Regal just go away. That would be a very positive catalyst for AMC. What other questions you got? D says you speak as if they don't generate any cash flow and they're living off their savings. That is exactly what they're doing, D. Have you looked at the financial statements? How do you not look at the income statement and the balance sheet and the cash flows and tell me that this company is generating cash? They are using the money that they generated in 2021 to pay the bills and get to where we're at right now. If they would have not had that money from the cash raise in 2021, they would have already been bankrupt. AMC is burning on average $225 million a quarter. Why? Because the movie industry is not generating enough movies for them to fill all the seats on a regular basis. That's going to probably take until 2024. Every quarter this year, I expect, will be a loss. Now, other channels want to talk about naked shorts and tokens and criminal hedge funds and yada, yada, yada. I'm going to talk to you about the fucking financials. The black and white, the reality of the stock you're holding. Some of y'all don't want to hear that. Then go to the clickbait, folks. Keep bugging them for another 2 years. Ask them why something's not happening. Why are we being shorted? Because the company's losing money. Because half the investors want to hamstring the company's ability to raise cash and stay liquid through the rest of this year, which is going to be a difficult year. Is the company doing better? Is the company improving? Is the industry improving? Yes, but this is still going to be a battleground year because they're losing money. Steve says, is it likely they will short it back down after the reverse split? Steve, after the reverse split or without a reverse split, there is going to be dilution either on AMC after the reverse split or APE, if the vote is no. There's going to be dilution either way. We already know in every stock we watch what happens when dilution is coming. The price gets run down. I think, in my view, it will have nothing to do with the reverse split. It will have to do with the expectation of dilution. The price, if the price is pushed down after all of this is said and done, it will be pushed down because of the expectation of dilution. But you're going to have dilution either way. Either APE's going to be pushed down with a no vote, or AMC will likely be pushed down with a yes vote. In the meantime, if you choose to hold this stock, you're going to have to weather through that. This is your choice, guys. You can sell now and avoid all that and buy back later, or you can hold through it and weather the storm, let the company raise cash, and then down the road, I don't know how many quarters, when they raise cash and start reporting that they paid off some more of the debt, that the balance sheet is improved by having billions more cash back on the balance sheet, then Wall Street will view this company more favorably. This is a balance sheet improvement move. You got competitors going bankrupt. You got new revenue streams with popcorn. I don't know what that is going to contribute. Credit cards, Adam said I'm not expecting credit cards to be a major revenue contributor, but Adam said today that he thought it was. We'll wait and see. G Gecko says, I worry if retail starts jumping ship, the stock will tank. It could. It could. Like I'm not going to sugarcoat shit for anybody. Thomas says, even if the squeeze is over, not selling. SF, you started as clickbait hopium dealer. I started as a clickbait hopium dealer? No. Nope, SF. Brett says, what do you think the spread will be between the two at the pass vote looming? I think it'll be close to what we're seeing on the poll there. About 65% will vote yes. Jeffrey says, I have a feeling AMC popcorn is going to be like Tickle Me Elmo in the Christmas of '96. Brand strength is strong. I think that popcorn is going to sell out in the first week, Jeffrey. We were trying to spitball some numbers. I wish Adam would have talked about popcorn. How many units are they shipping in Q1? The margins on grocery store items is about 30 to 35%. So how many units of microwave and bag popcorn do you think they're going to ship per quarter? 1 million, 10 million?
I have a feeling AMC popcorn is going to be like Tickle Me Elmo in the Christmas of 1996. Brand strength is strong and many customers are aware of AMC.
If we say 1 million units at $4 each, that's $4 million. If we said 10 million units in a quarter at $4 each. I know it varies from $4 to $6, but let's use the low end. That'd be $40 million times 30%. $12 million bucks. It's not going to pay off the debt. 12 million bucks on popcorn. Not going to pay off the debt. But it is incremental revenue. Your company, the company, is doing stuff to increase revenue streams. Tech We Love says, how many of these commenters are paid shills? They're just people that hate AMC. Tech Love. They want to take care of your wallet for you. GG says, am I out of the plane? No, I will let you know if I sell. GG. Still have all my AMC, still have all my APE. I added APE. I have more APE than I have AMC. But I'm tired of holding people's hands. KWM says, this play is a dead horse for the next year. The Decider says, Adam Aaron not helping us. Well, I mean, Adam Aaron is doing what he needs to do to ensure the survivability and the viability of the company. Did Adam Aaron ever promise you a MOAS? Was there a tweet where he said, I'm going to make sure you guys get your MOAS? No. He said checkmate on the people expecting bankruptcy of the company. I agree 100%. Company's not going bankrupt. Steve says, did Adam Aaron say how much of each stock retail owns? I see in the 10Q, the only thing that they talked about was how many shares are direct registered with Computershare. We have 6.5 million common stock and 204 million APE at Computershare. 6.5 million. That's not very much. I did find a regulation that the transfer agent and the company can request prior to a proxy vote all of the number of shareholders out there. So when Adam got that 4 million number, I'm thinking, back in 2021, curiously, we haven't had any updates in almost 2 years about what the number of shareholders is, but they can go in and request from the brokers the number of beneficial shareholders. I am curious on March 14th if we'll get an update on that. I posted that on Twitter about a week ago, if you follow me on Twitter, that regulation. Jeffrey says there are 4,500 Walmarts in the USA. Each would need to sell 215 to make 1 million popcorns. Yeah, that seems very doable, right? 215 is 1 week's worth of probably what they would sell through. Ape conversion, Chris. 1-to-1, yes.
In the USA, each would need to sell 215 to make 1 million popcorns sold.
Dogecoin, will AMC share price go back to the levels 2 years prior to COVID? You mean prior to COVID, before the run up in January and June? How much money from popcorn goes to AMC? Brian, I think about 30 to 35% of the MSRP. That's a good question, Doge. Many things have changed since 4 or 5 years ago. I'm not going to try and answer the question without looking at number of theaters, movie releases. It's too many variables to say. Also, you're going to need to look at how many shares are out there from 5 years ago. We have way more shares out than we did back in 2018, 2019. Who started the MOAS theory, Narrow White? That's a good question to ask. Am I starting to lose faith in the play? Jerry, I think, between now and the vote, Jerry, with the cost to borrow being high and the short interest being high and a lot of uncertainty with the APE and AMC conversion, that this next several weeks could be pretty interesting. I think that if these stocks are converted and they would do the reverse split and then we have some dilution, we all know what happens when dilution announcements are made. Temporarily, there could be some push down on the stock price. That's just statistically speaking, being very blunt. Do I have a crystal ball? Can I tell you it's going to squeeze up after a reverse split or get pushed down? No, I can't say anything with certainty, but I know that statistically speaking, when dilution is announced, prices tend to drop. I haven't looked at the Benzinga article, Iron Man. I also know that statistically speaking, when companies improve their balance sheet, in due time, the company stock price increases. Earnings was negative 26 cents. Hazel, let me pull this down here. Oh, yeah, unfortunately on this is just the annual. So they didn't break it down by quarter. But it was negative 26 cents versus a estimate of negative 21. And the adjusted, you'll see some people reporting adjusted earnings, negative 14 cents. I don't report on adjusted earnings. That is what I call accountant marketing talk. So you'll see two numbers. You'll see negative 14 and negative 26. Negative 26 is the real number. AD, would it be better to sell APE on or near 314? I think the best time to sell any stock, AD, is when it is approaching a local high. Whether you want to hold through that or not for a squeeze high is up to you. I can't give you any specific advice. I have been saying the time to buy APE. If you're an astute investor, the time to buy APE was when it was punished down on price, especially below $1. Now with all the uncertainty going on with the lawsuit and the vote, I can't tell you when to sell. I'm just sitting pat with mine and watching the chaos unfold and hoping that something shakes loose. What else? I saw some people saying, if it had to go to 72 now, it would have to go to 720 after the reverse split. That is true. And no, you're not losing 90% of your shares. It's just math. But I will also tell you that it is just as difficult to get to 72 on the current float as it is to get to 720 on a float that is 10 times reduced after a reverse split. It's the same exact math. So if you think 720 after a reverse split sounds difficult, then by math, you're also saying it is difficult to get to 72. I hope you realize that. If you don't understand that, then you are failing to understand the impact of free float. Wall Street doesn't look at the price of a stock like you do. They look at the free float versus the price. Damrick says, I believe the lawsuit will be dismissed. I think it will be dismissed also. In my reading, in my investigation research, AMC did not violate any regulations. All the disclosures were there. If I fucking knew about this shit, there's no excuse for an investment manager up in Allegheny County not to know about it. Yes, Kevin, as I'm talking about getting up to 720, I'm conveniently ignoring the dilution, right? You and I know that. Astute listeners will get that. I'm just talking about the effects of a reverse split. To get to 72 now after a reverse split is the same as getting to 720 after, because things are exactly the same. It's the same difficulty level. What will make it worse after the conversion and the reverse split is the dilution that's coming. As they add more to the float, then 720 becomes more difficult to obtain, right? That's common sense because you're increasing the float. GG says you're talking to people that thought they were going to get 10,000 a share. I know. I've never ever given a price target on this stock because frankly, most of the price targets that were out there, in my opinion, are not realistic. I'm in it for one more squeeze chance. But my price targets, I can assure you, are not as ridiculous as Al's $500,000 theory. V-Gamer says, what makes you believe that the shorts can't push the price of AMC down like apes? I don't know that I said that they can't push it down. I'm pretty sure I just said the realistic expectation, the statistical expectation is when a dilution announcement is made, you can expect, statistically speaking, of all the stocks that I watch, when dilution announcement is made, that they get pushed down. Ellie says, basically, our only hope is for something to trigger a squeeze before the vote. That is our best hope, Ellie. Yes, I would agree with that. If we're still in the play after the conversion and reverse split, then I think you're going to be a long-term holder of AMC. What is my target squeeze price? I just got done saying, I hope you're joking. I have never, ever given a price target. That would be, in my opinion, specific financial advice. And people that are giving these ridiculous price targets are potentially going to have someone come after them. And if not that, they're going to either create bag holders or force people to sell too soon. So I don't give price targets. You sell when you're happy with your investment. Is there still an arbitrage play on APE? I do think, since this, guys, this is opinion right now. It is my opinion that the lawsuit will be dismissed, or that the judge will rule in AMC's favor. That is just my guess based on my reading, my research. And the lower APE gets, the more I'm looking at it again as buying some more on an arbitrage play. I am not buying it right now. What are we at on APE? $2.07. Still too expensive for me. Remember, I was adding APE at $1. I'm not really trying to average back up now. For some of you that didn't buy APE, that didn't take advantage of any arbitrage, you know, maybe you think $2. It is undervalued at $2, but I would be averaging up if I'm buying it at 207. I would prefer to to add, if I'm adding more APE for the arbitrage play, I would prefer to keep it closer to my cost average. The other things that I just wanted to touch on, again, management is looking at this different than retail is looking at it. There's a lot of people that don't care that the company is getting drawn down on cash. So their goal with this conversion and reverse split is to have a more efficient ability to raise cash with less dilution. If you vote no, you're forcing them to do more dilution at a inefficient price. Lance, how will the pricing of the conversion work? That is a good question. I've talked about, there's two school of thoughts, Lance. First of all of your each APE will become one AMC. That's the 1-to-1 conversion. When they get combined, the market maker or somebody is going to say, all right, on the next day, the price is going to be X, some combination of AMC and APE. What is X? Well, we've seen from John Merriweather that he's saying that he thinks X will be the price of AMC plus the price of APE, which would give us, what, like $9. So 90 after the reverse split, if it were today. That's one version. That's one school of thought. Another school of thought is that it will be the combined market caps divided by the float, which would probably, that's going to be lower than the current price of AMC. So that would, I'm just spitballing, let's just say roughly around $6 combined. That's due to the higher float of APE. So that would give you a price after the reverse split of around $55, $60. I don't know which one it's going to be. Whichever one it is, that will be the price for a millisecond, and then the market will decide the price once trading starts. It doesn't really matter what the conversion price is. Within 1 second of it start trading, you'll know what the price is. African Buffet says, why did we get APE in the first place? Because the company needed a way to raise cash. Imagine if they didn't sell APE in Q4. Your balance sheet right now would say, instead of $684 billion in cash, it'd probably say about $460 million in cash. Instead of 684 million, it'd say 460 million. And then next quarter, it'd say 220 million. And then the lenders would call all the debt due. The company's not, that would be dereliction of duty if the company allowed cash to get drawn down and file bankruptcy. So they did what they needed to do to raise cash. Nate says, why did the price get hit hard in after hours? I'm not worried about after hours, Nate. Tomorrow when the market opens, we'll see. I think that, it was a small miss on earnings, -26 versus -22. That is probably why you have some negative price action. What's the gold mine costing us? Hycroft was down 7 cents from last quarter. It was a minimal impact for this quarter. Again, Hycroft is a 5 to 7 year investment for AMC. Nothing is going to happen with Hycroft, guys, for the next couple years. I'm not going to analyze Hycroft or throw AMC's investment in it under the bus in 2023, and I will not do it in 2024. Ask me in 2027 was it a good investment? Hycroft has got a long road to get their exploration finished, to get a new milling plant built, to do a reverse split, to do another cash raise. It's going to look pretty shitty for the next 12, 18, 24 months. If they are successful in executing to their plan, and if the price of gold and silver stay high 2 years from now, that could be a very good money generator. But you can't judge it in the short term. It's going to look like shit in the short term. They're not actively mining. They're exploring. They're prepping for the next round of mining. You're going to have to be patient with that play. In the meantime, the bears are going to have a field day with it. The shills and the trolls and the haters. Yes, it's going to look bad because they're not actively mining. They're prepping for the next phase of mining. If you can see that, you can see through to the future. Will they be successful? I don't know. If you don't know what the hell I'm talking about, go watch my last 4 videos on Hycroft. 1 last week, 3 in November.
Thanks, Tony.
Thank you, Riptide. Did you guys see that mining collapse in that coal mine in China? Was that real? I saw a video posted on Twitter. It was just horrific. You know, the pit mines, like what Hycroft does, where you have these terraced step downs, and then at the bottom of the pit is all of the huge dump trucks and the I don't know, the tractors, for lack of a better word, backhoes. The whole fucking side of the mine, a mile long, there was a landslide, and I was just watching trucks and tractors being buried under hundreds of feet of dirt. Horrible. If that was real, God bless. China. It was in China. All right. Any other pressing questions? As far as a lot of people are asking me, what do I think about Cineworld and Regal? I'm going to repeat what I've said in the comments on videos. I do not support, and I pray to the gods, both old and new, that Adam and AMC are not thinking about buying up every Cineworld Regal location. Please, Lord, no. We do not need more debt. We do not need to waste hundreds of millions of dollars or billions buying up every fucking Cineworld Regal location. I don't know what they're planning on doing. I would not be very happy if they did that. If it was me in the boardroom, I'd be saying, how do we work out a deal to cherry pick the best locations? Let the rest go to the grave. What we need is less screens in America, less screens in Europe. If we can let some of these screens go to the grave, the remaining screens that AMC owns get more butts in seats. What percentage of losses is from debt repayment and movie theater rentals? It's about half, Richie Rich. On any given quarter, about half of our loss, 100 or so million, 120, is for debt, and the remainder is operating loss. Operating loss will get fixed, I think, as we get closer, as we get into 2024 and there's more movies and better movies, the operating loss will get fixed. The the loss from debt is not going to get fixed unless they pay some of it off. BabyJesus says, Tony spreading FUD. What FUD am I spreading, friend? Look, if you're deep in the clickbait and Reddit world, I know that hearing facts is going to sound like FUD to you. This is not the channel for you. We're here for the real investor, people that want to make money. Paul says, why did he not sell when it was $10? They didn't have the paperwork filed, Paul, and it was only at $10 for about an hour. And if he did sell it in that first hour, then you would have blamed him for driving the price down. He's literally in a no-win situation. William, I have looked at AMC's profit margins before COVID. Maybe I can pull that up. See, the thing was, as AMC was into 2018 and 2019, let me pull up this chart. What had happened was the company was buying up major competitors, and that added debt, and they were not exactly super profitable. I'm trying to be as nice as I can. In 2018 and 2019, let's zoom in on this, because they added all that debt. Now their plan was to grow, to watch the industry continue to grow, and to close down some of those non-performing locations on the competitors that they acquired, and they would have worked their way out of it. But then right after all that, COVID hit, and that just screwed them up. If we look at, let's look at earnings per share by quarter. Can you see that chart? There's a lot of negatives right here. Oh, going all the way back to 2017, I see two positive quarters. But where you see those deep losses, that was because of the acquisitions that the company did. Now their plan, as you see, they were coming out of that as they got into 2020, and they would have probably been able to get into positive earnings, but then COVID hit. So the plans, the best laid plans, got ruined. Now we're in a different story. Did Adam Aaron give a date for the reverse split? The injunction hearing, preliminary injunction hearing, is April 27th. That's the date that I know, the next date of interest right now. Could something happen before then? Something could always happen. But that's the date that I know about right now. Does that mean that we'll get a final decision, that the judge will make a decision on April 27th? No, not necessarily. BabyJesus. Where's my soundboard? All right, guys. If BabyJesus, if you want him to stay, you don't do anything. If this sounds like maybe not the channel for BabyJesus, throw a torch in the chat. I think he needs to go back to some of the clickbait channels. He's not interested in learning how to make money. Karen, bring me your torch. The tribe has spoken. It's time for you to leave Ape Island.
Chinga tu madre!
Goodbye, Jesus. There's going to always be clickbait channels for you, baby. Don't worry. Don't come back here. I can't help everybody, guys. Some people are going to be left behind. It is the unfortunate lot in life for many retail investors to be tricked by hopium and clickbait. I get it. It sounds so sweet. Go trash your portfolio somewhere else. Sammy boy, what's up? Thank you, Doc Zeno. Love ya. Do I think we're going back to 850? You mean like is AMC going to run back up? I'll do some chart analysis later tonight, tomorrow. I don't think we're going back to 850 tomorrow. No, not based on negative 26 cents earnings. Cancel bubble summary of earnings. A slight miss. I think the Wall Street consensus was around negative 21, negative 22, and we came in at negative 26. But I tried to tell y'all last night in the video, don't expect a lot from this Q4. For anyone who thinks that an algo is going to run the price up in light of a company earnings miss, I've got some reality about to smack you in the face. But hey, we can always hope, right? The best thing we have going for us right now is the short interest remains high. The cost to borrow remains high. There's been no vote taken. And a lot of institutions and hedge funds were positioning their portfolios for the vote going through, and now they don't know what the fuck to do. So could this still be interesting between now and March 14th? 100%. Stay tuned. I'm not doing anything. I haven't sold shit. Thank you, Paolo. NotMoneyAdvise says, Tony, I'll bet you a shot of Everclear that the judge approves the injunction. So let's just, to make it clear, let's clarify the bet. And I'll take the bet. You're betting that the judge will completely nullify the vote. I'm going to bet that the judge will, for the most part, dismiss the case and allow AMC to proceed forward with the conversion and reverse split. Does that sound like a fair bet? We don't need to decide specifically on the date of April 27th because this could drag out for a while, but let's just bet on the end result. If you agree, I'll take your bet for a shot of Everclear. Why is everyone saying that we beat earnings by 33%? Andrew, AMC released earnings, and then they released adjusted earnings. I do not report on adjusted earnings. Adjusted earnings is a spit shine, a marketing accounting to where they tell you a number that sounds a little better, but the one that will be on the earnings statement is the real earnings, which is negative 26 cents. The one that they release to the public as a alternate, look over here, is what they call adjusted earnings. That's when they take out certain costs. I do not focus on that number. And I've never seen, ever in my life, a income statement show adjusted earnings. It was 26 cents. Let me just look at this document one more time, because unfortunately in the document they didn't break down the quarterly. Let's see, maybe this website has it already. Nope, not on there yet. Net loss for the year was negative 93 cents. Let me do some math here real quick. The past 3 quarters were 46. Shit, I don't have adjusted for the float change. I can't do the math. I'll do a video on it explaining adjusted versus actual. Let me do one more quick search on AMC earnings. Operating cash burn. I want to know total cash burn. All right, so I'm going to go ahead and wrap up the stream. I'm going to go compute the actual numbers and see if it was really 14 cents. If the consensus was 21 and we hit 14, that would be a massive beat, and you would see the price going up. So I do not think that it was really 14 cents. That was the adjusted number. But I could be wrong. I could be wrong. I need a moment not being live to go through and do the reading. Did he take my bet? Not money advice. Do you accept? Should we vote Adam Aaron out and replace with the Ape Father? Ooh, oh boy. Irish Man says, I wish you'd be a little more enthusiastic. I mean, It was a humdrum Q4. I'll be enthusiastic when we get the Q1 numbers in. Q1, guys, is going to be better than Q4. It's going to be better than Q1 a year ago. I think every quarter this year is going to be better than the preceding quarter. This is going to be a great year. I'm just tired of the nonsense and the fighting in this community. The shills, the trolls, the plants, the people that can't be bothered to go read financials and understand the company's issues and concerns. I don't know. I don't know what to say. Where's my gambler? Do you accept the bet or not? Whatever the date. Whatever the date, do you accept the bet? One shot of Everclear that the judge will allow the vote results to go through versus your position that everything will be canceled. Where did he go? David says, we're not going to be here by Q1. Mo ass is on the corner. Man, I sure hope that that is correct. I'm holding right along with you guys. I would take a Mo ass. I'd take a squeeze tomorrow. Believe me, I'm ready for this to be done just like you guys are. No, Maximus, no random stock talk tonight. Go see Cocaine Bear. Yeah, I don't know if I got to talk to you guys since we went and saw Cocaine Bear. What a fucking riot that movie was. If you go in there, look, you don't expect Oscar-worthy performances, but the acting was good. The script was good. There was a lot of laughs. There was a massive amount of bloodshed, and people are like, oh, God. It's those moments where you're like, oh, my God, what did I just witness? And then it was so horrific and funny at the same time that people were laughing at the fucking bloodshed out loud. I mean, I rarely see movies where there was that much out loud laughing as Cocaine Bear. Do yourself a favor, treat yourself, go see that movie at an AMC theater. NotMoneyAdvise says, bet that the judge will grant the injunction regarding APE does not have voting rights. Yes, that is the bet. Do you accept? I accept the bet. Whatever the date, the judge will allow the vote to go through. She will allow the conversion and reverse split to go through. Mark says, you sound depressing. Yeah, facts aren't always fun, friend. Come back when we're having a drink. Does the bear actually snort a line? He does. He snorts a line. He eats a bag. He eats a brick. All right, guys. After this earnings, after this price walk down, I think we all need a shot. We need a shot. We need a day to recover. We need a day to read through the whole financial report. I know I do. I need some time to go in and digest it so I can talk more intelligently about it later tonight. Maybe not. Maybe not later tonight. We'll see. We'll see how much I get through. I actually do read financial reports when they come out. So, and I encourage you guys to do that too. If you're in investing for the long run and you have a sizable position in a company, you should be reading everything that the company puts out. You're going to get a lot more reliable information reading company documents than reading Reddit. We got a little bit of Casamigos. Let's do a shot. Let's do a shot, motherfuckers. Nothing like doing a shot right before you sit down to a 100-page annual report. V Gamers, was that a question or a statement? Believe it is shareholders' right to question the leadership. It's always your right, absolutely. Jim says, I know the CEO of a company I work for cares a lot about the shareholder value and retaining stock price value. Oh, I see you guys are having a little sideline conversation there. Bottoms up, bitches. Fuck the hedgies. Fuck the shorts. Fuck the trolls. That Casamigos is a damn smooth tequila. Good news, FTDs are high, cost to borrow is high, short interest is high. A lot of uncertainty, a lot of volatility between now and the vote. Who knows what's going to come out of the lawsuit? Might be some more drama between now and April 27th. Choose wisely. Good luck, whether you're in both like I am or you're trying to play one or the other. I have no fucking clue. Things are getting ping-ponged around by this lawsuit. It's hard to say. Hard to say which is the smartest play right now. That's why I'm sitting pat with what I got. How old am I, Irishman? It's rumored to be somewhere in the low 50s. Bringer of Z says Pino with a frozen pizza. That sounds good. I bought the other night I bought a couple bottles of red wine, and we bought a inexpensive, I think it was DiGiorno rising crust 4-cheese pizza, and then I went and bought some premium pepperoni and a ball of buffalo mozzarella. So it's kind of like a create your own freshly made pizza. And that shit was the bomb. And I got one left frozen in the fridge. I think I might do that tonight as I'm reading through the annual report. Slice up that buffalo mozzarella. Get those big, uncured, real Italian pepperoni, not that cheap shit from Domino's. Layer carefully the pepperoni over the entire pizza. Cut the buffalo mozzarella up into little chunks and let it melt. Oh, man. That's some good shit. And probably cost me all in about $12 to $14 versus I know if I went and got that shit at a restaurant, that'd be $30. I would put more ingredients on it, but my wife is very particular about her pizzas. It's like pepperoni only. Normally, if we order out, I got to order a separate pizza. Damrick says, these trolls got like 10 shares and they're worried about the split. I think some of them honestly have more than 10 shares. But many of them sold their ape. They went, they believed the whole sell your ape thing, and they moved all over to AMC, and they don't want to be diluted by ape converting. I get it. You made your choice, and now you're trying to fight us that held. Well, I'm not going to go down without a fight, bitches. You paper-handed your ape. I did not. I have the right to say my opinion. Not only did I hold my ape, I doubled down on that bitch as it got cheaper. Any intelligent investor would have done that. The people that come in the comments, oh, you just want to vote. You just want to vote for the conversion because you're arbitraging ape. Tell me you're stupid without spelling out I am stupid. You mean you did not see the opportunity when ape was at 65 cents? You come and comment that shit in my comments. You're just proving to me that you never belong on this channel. You're a dumbass. Anybody with common sense that has any experience investing would have been all over ape at 65 cents. But you fell for the Matt Kors and Meet Kevin bullshit. Okay. You made your choice. Go back to those channels. Don't come comment in my channel. I don't got time for your nonsense. I don't have, Larry, I don't have, my ashtray is like a mason jar. AD says, is it true shorts will use apes to cover their AMC short positions? So I could see a case where people could say that, AD. If they own ape that they bought cheap and then it converts over to AMC, now they're holding new AMCs that they could use to cover. I could see someone making that argument. But for everyone saying that, I'm going to add to the story what they also say, that they're going to short AMC after the conversion and the reverse split. So how can you say they're going to cover with ape and then out of the other side of your mouth saying they're going to short? Which one is it? Are they going to cover or are they going to short? You can't say both. Do you understand the way that these people are slipping all these stories in just to make you uncertain about what you're doing? They're going to cover with ape. They're going to short it after the reverse split. Which one is it, bitches? God damn, the stupidity coming out of these people that are trying to scare you out of this play, the double speak, is just mind-boggling. I'm just sick of it. They are fucking lucky that I don't like spending my day calling bullshit out on Twitter, or I would fucking mow them down. I don't got time for that nonsense. Bringer of za. Thank you. Pizza. Bringer of za. Pizza. Bringer of za. Hopefully I got that right. All scare tactics go to Al Shelby. You know what was so fucking funny? This dumbass from the Extension University of Harvard put out a "you can't make this shit up" video talking about Citadel getting sued 10 years ago for convertible securities. Guys, you can't make this shit up. Yes, you can make it up, Al. You just fucking made it up. You brought up a clickbait video talking about a lawsuit of convertible securities. APE is not a convertible security, dumbass. I know you know that, Al, and if you don't know that, bless your heart. But this is the clickbait, FUD, shill, bear, paid shill nonsense that these dumbasses put out to scare you out of this play. And he'll drop a little, popcorn is so bullish, but I hate Adam Aaron and fuck this company and look, Citadel, good. That had nothing to do with this lawsuit. Just pure, utter bullshit. And then people want me to comment on it. Guy's not even worth my time. There's a reason he does not show his face. There's a reason he blocked me on Twitter. There's a reason comments are off, because I would fucking mow him down. Fucking bullshit artist. All y'all that want clickbait, you know, you got a home over there. You want to hate Adam Aaron, you got a home over there. Sell your stock and go hate Adam Aaron all you want. Fuck off my channel. Lane says, what did you say the price of AMC would be for a second if... I gave two different cases, Elaine. I don't know which one it'll be. John Merriweather says it'll be AMC plus APE. Maybe. The other camp says it will be the market caps divided by the price. So that would yield, right now, if it were today, it would yield in case A, John Merriweather's case, a price of around $90. In case B, it would yield a price around $55. I don't know which one it'll be. It's really irrelevant to me which one it is, because as soon as it starts trading, the market's going to decide what the price is. James says, if you diversify, you shouldn't be scared about anything, right, James? It is my strong hope, guys. Those of you that stick with this channel, I'm going to keep telling this story. Do not ever fucking YOLO your money into one play. The reason everybody on the other side is all emotional and they're crying on 20 YouTube videos a day right now is because they believed Reddit, they believed Lou, and they YOLO'd all their money into one play. Probably some of them at a very high price, and that is unfortunate. I was not around back then, or I would have been telling you the same thing I say every week. Don't fucking do that shit. If you're stuck in it now, look, you're welcome here. But I'm going to be talking to you about the importance of having a diversified portfolio, many different plays, understanding the risk in each play so that you can scale your investment accordingly. And for God's sake, don't buy shit into a run-up. If you missed a play, there's another one next week. Why am I so zen about everything? Because A, this is not my only investment. It's one of many. B, I had shares that I was buying at $7 or $8. Yes, I bought through November of 2021, still thinking, that we might get one more squeeze. So my overall AMC position, if I look at shares from 7 to whatever, I forget, the high 30s that I added gingerly as we were in that price, my overall share position is in the red. But I also had call options that I was buying in May, late May, early June, that I made a fuck ton of money on. Those were the very first things. I was unloading options, call options in that run up. And I would have been telling you to do the same thing. Always unload your options first. Always be taking profit. So why am I so zen? All of my shares are paid for. My shares are paid for from the profits of options I made. And I also have bought call options on the lows of AMC over the last 18 months. Every time it bottoms out, I go buy some call options, 90, 120 days out, wait for the next little run up, sell them for some more profit. There's ways to make money in this play. You understand the play. Don't be a victim. If you don't have money, get a second job. Don't be a victim. I don't want to hear any excuses. Right now, in this economy, this down market, this is the time to be working your ass off and stacking cash in your broker to take advantage of whatever opportunities you want. Many, many beaten down stocks. Your 5-year self will thank you. Rich says, I'm stuck. Average down. Wait, keep up. Doge Cult member says, this is what I think is funny with this place. So many lying about their positions. I don't know. I don't know who they is, Doge Cult. I've told you guys, I'm on my shares. I'm down in the low 5 digits, but that's fine because I made a fuck ton in call options. I have never in my life seen my account rate, the increase in my account happen that fast, ever. And yes, I took those profits on those call options. While I was watching Matt buy, price is $40 and he's buying $60 call option. Like, what the fuck are you doing? I don't remember if that was exactly the story, but I remember watching him buy call options as I was selling, and I'm just like, I need to start a fucking YouTube channel. This is ridiculous. The fuck are these kids doing? The other reason I'm zen about everything, a lot of our portfolios are down on a lot of stocks. It's not just AMC. If you were buying anything in 2021, probably all of it is in the red. The vast majority of it. So, hey, that's the market we're in, guys. We're in a down market. That's going to last probably the rest of this year. Just internalize it, deal with it, let it go. Breathe in, breathe out. You're going to be fine if you can have a longer perspective. But the opportunity is here for you now on all of your favorite stocks to buy them at a discount. I'm not saying load up on AMC and APE. You've already got heavy exposure in one play. You can choose to average down in it, that's fine, but also recognize the struggles that AMC has ahead of itself over the next year or two. If you do that, that's your choice. I'm buying other stocks. Amazon, Tesla, Microsoft, Google, Apple, other companies with a history of positive earnings and positive growth. Because the deals are just too good out there to pass up on this shit. Am I going to make a MOAS or a short squeeze on any of them? No. But I'll do just fine. MotoGP says a friend does well with the E-mini 500. I don't do a lot of active index trading, MotoGP. Probably tell me, MotoGP, what's his average duration of holding? Is it just daily? And what is his targeted return per day? Because when I'm buying options, I'm usually, if I don't see a potential to book 100% gain, wait for the next opportunity because of the risk of being wrong. That means I trade options less frequently than some, but when I win, I win pretty big. I don't win on all of them, of course. The idea is to win on about half of them and then have your wins be really, really big. There are some people that just trade options frequently and make, they're making 20, 30% on those. I'd say, what is your overall record on them, though? Because some of them for sure they're losing 100%. Jay Hoff, opinions on chip companies long term. We have a lot of discussion on that in the Discord, Jay Hoff. I'm not currently invested in any chip companies, but I'm looking. We're watching Intel, AMD, NVIDIA, Taiwan Semiconductor. There are some people that are really into it. I held some Micron in 2021. I'm not holding any at the moment, but I am considering getting in some again at some point. TRKA, I'm not going to make a video or comment on it. I've read my due diligence. I posted a week ago in the Discord all that you need to know about TRKA. Because it's a penny stock, I'm not going to make a video on it. But if you watch my live stream for the other night, I did read aloud for you my DD on TRKA. I'm not going to repeat it. This is not a penny stock channel. Although we will trade them when they're moving. Get in early, get out early. Am I looking at any AMC calls? I have March 17th calls right now, 6M. What country would I visit next? I would like to go to New Zealand and or Australia in a combined trip. Would like to go to Greenland. And where else? Maybe somewhere in South America. South America, I have only been to Brazil. So there's a lot of places for me to go down there. Galen, I love you too. Thank you. Thank you, H.G. Wells. Have a good night. Anubis says it's rational to give shorts an easy way out by diluting yourself. I mean, Anubis, we could just keep on doing what we're doing right now. That's worked really well on making them get out. Do you hear what you're saying? Like, all of you that are voting to just keep on doing what we're doing, how the fuck has that worked out for you for the past 18 months? Seriously. What will make them consider that this might not be a great short? Improving the balance sheet for one. Increased number of movies and increased global box office for two, but that's a 2024 play. If you do nothing, if the company does nothing, you're going to be stuck right here with these fucking shorts until the company starts turning a profitable quarter. And that's going to be not in your time frame, not for any of you impatient people. So it is going to be inconvenient. But the best chance that the company has is to improve the balance sheet, to get the shorts off their back. Wes Christian will tell you that. Share Intel will tell you that. Any CEO with common sense will tell you the best way to get the shorts off their back is to improve their balance sheet and improve their income statement. There's only so much AMC can do to improve the income statement because they're held hostage by Hollywood. And Hollywood is spinning back up. It takes a while to film and edit and release a movie. So we got a ways to go to get back to where we were in 2019. That's a 2024 play. Doge Cult says everyone is getting into scalping now because the market is not giving anything back. That is the way to do it right now. Find the runner of the day. It's gonna mean you need to wake up early, guys, like 3 or 4 hours before the market opens. See what's running. Get in at the very first minute. Ride it till the bell and then get out. Or ride it till you're happy with your profits and get out. And then if you're still not tired, watch for after the bell opens, after the market opens, after the bell, see what is running in market hours and try and do that one more time. There's a lot of scalping opportunities every day. Do not buy them after they're running up. I mean, you can and you might get lucky. But the odds of bag holding increase dramatically if you're buying it after the run up. So if you're buying it after the run up, you better have a plan to get out. If it starts turning, don't second judge yourself. Don't second guess yourself. Get out. Wait for the next one. Get some discipline in your trading. Don't buy shit on the way down. You know how many people I see that are, oh, this stock ran up and it's coming back down, so I'm going to buy it. Chances are you just made yourself a bag holder. Every now and then you'll get lucky and get a second run. Every now and then. But statistically speaking, if you're buying stuff on the way down, you made yourself a bag holder. Gut feeling from the earnings call, Peter. I think it was expected that Q4 was going to be kind of ho-hum. We got what we wanted. I mean, we got what we expected. I need to gauge the impact of the goodwill impairment because I was off by a couple pennies on my guess. But I have no way of. This is very complicated accounting work to calculate goodwill impairment. So I'll see how, if the goodwill impairment charge in Q4 is what made me be off on my guess by 4 cents. But it's about what I thought it'd be. Just not as good as Q3, not as good as a year ago Q4, but we're looking forward to each quarter of 2023 being much better. A lot of great movies, more and more people every quarter going back to the movies. New income streams coming. The future is good. We're not out of the woods yet. But it's getting better every quarter. And the day that you see that it's not getting better every quarter, then you need to have a come to Jesus talk with yourself. But we're not there right now. We're seeing things get better. Do I think APE is going to be under $1 anytime soon? I don't think so, Brazil. If I had to guess, I said, I think in the Discord that I would consider buying APE around $1.50. I don't know if it will go that low. I really don't see it getting around $1 unless there's compelling testimony or judgments coming out of the court case that make it look overwhelmingly like there's going to be no conversion, then APE is going to go down to 65 cents. But if we don't get any news until April 27th, I'd consider buying somewhere around $1.50. That's me assuming the risk that I'm incorrect on the judge's decision. or me assuming the risk that I'm correct or incorrect, depending on how you look at it. I'm assuming the judge is going to rule in favor of AMC. So therefore, I would add more APE at $1.50. Thank you, Galen. Galen says you did pretty good at guessing, considering you don't have the resources. It's not that difficult once you've been doing this for a lot of quarters. You can create some formulas that extrapolate domestic box office to earnings. It's always the gotchas, the unknowns, like goodwill impairment, that make it difficult. Any Texas ice storms this week? No, I actually heard the air conditioner kick on this afternoon, so must have been warm outside. Man, it's already dark. We've been having high 70s, low 80s here recently. Anibus says, how do I feel about Adam Aaron diluting twice as much as already proposed? I don't know what you mean. He diluted 500 million APE, right? He authorized $1 billion. I think we expected that he was going to dilute all those. At what point do I have enough APE? Is that what you're asking? At what point do I have enough APE? It's already it's an uncomfortably large percentage of my overall portfolio. I'm not looking to make AMC and APE an totally overweighted percentage of my portfolio. I've got enough risk in the play. If there is a strategic moment where I think one of them was cheap enough that I'll add another 100 shares, I'll do that. But I'm not trying to increase my exposure to this play unless there was a compelling cheap price. I added some AMC a couple months ago at $3.90, and I added APE when it got really, really cheap. Damn, Mexican Silverback got 3 inches of snow in New York City. Fuck. Jim says, I'm curious how Adam Aaron thought he was going to get rid of all this debt he built up without apes. I think, Jim, he honestly thought he was going to get his dilution in 2021 approved. What he thought. And we put the kibosh on that. And I actively spoke out against the dilution in 2021. It was a different play then. The economy was humming along good. The market was doing good. Hopes were still high. Enthusiasm was high. The company had nearly $2 billion in cash. Our moment to snare another squeeze was right there in our grasp. And so I did not want more dilution. That was being personally selfish at that time. But now, 2023, as the cash is running out and we're facing a few more quarters of negative earnings, it's a different story. And I could choose to continue to be personally greedy and vote no, or I could choose to sell and just get out of the play, or I could choose to use my shares to vote yes and ensure the company doesn't go bankrupt. In the short term, that might be uncomfortable for some of us. I get it, because dilution. I get it. But it is not, we're not in 2021. We don't have $2 billion in cash in the bank. The company's been incurring losses. Where'd the money go? Paying down deferred rent, paying down debt, incurring losses because Hollywood isn't putting out enough movies, incurring losses because leases, you can't just walk away from them. They've closed 200-something screens. They're closing theaters as they can, but you can't just walk away from a lease. The landlord will call the entire remaining amount of the lease due. Adam Aaron's not doing enough to generate income. What the fuck else would you like him to do? We're the middleman, right? AMC's the middleman between Hollywood and the consumer. He can only put movies out as Hollywood gives them to him. Michael says, why wouldn't Adam Aaron let retail pay off the debt? I'm not paying off any debt, Michael, that I'm not getting a return on. You guys can contribute to, you can throw your money into a GoFundMe money pit and get zero back for that. No, I would rather buy shares and have the potential of future appreciation. If I had a choice between sending Adam Aaron 10,000 to a GoFundMe or buying 10,000 shares and having to hold on to them for 5 years, I'm going to take the shares all day long. They are not getting my money free of charge. Fuck that. Galen says we should have diluted back then. In retrospect, Galen, we should have diluted back then. But I don't live life in the past, right? None of us thought we'd be here in February 2023 still talking about this play. At that time when we made that decision not to approve the dilution, there was still a chance of getting the shorts over a barrel. And it's taken all the way till now, really, to get them over the pickle barrel that they're over with this massive cost to borrow and high short interest. Doge Cult says, talking to a friend, he showed him his portfolio on esports where he was at 60,000 profits, now down to 1,000. Yeah. I watched, did any of y'all buy MSGM, Motorsports Gaming? Remember that one? It ran from $2 to $50 and now it's back down to $9. Who is buying this shit at $50? What I'm asking. But when I talk, I know I made some people upset the other day when I was talking about a pattern of shorts covering. When I was doing my DD on AMC the other day, when I say shorts are covering, guys, when you see a pattern like this needle of death, when you see a run up, and this happened on AMC the other day. When you see a run up and then a very tall wick and then it just gets obliterated on the red and the volume drops off. This was initially some FOMO buying or institutional buying, whatever you want to say. And then the remainder of this, and especially this wick, is shorts covering. And I don't mean when I'm talking about AMC the other day, the institutional shorts all got out of the play. Get on my level when you're listening to me talk. There are retail shorts in this play, guys. There's YouTubers and armchair investors that don't believe in AMC that are shorting it.
Sorry if you have to repeat yourself. Are you happy about Q4 earnings call or still disappointed in a way?
I think the Q4 call was exactly what we're expecting. When things get run up, it ran up to $81. When things get run up like this is shorts being squeezed out. Or at some point, people that were trying to short it maybe at $49, they got railroaded on a run up to 81. And then when that buying pressure went away, it started selling off. And the same thing happened to AMC the other day. That does not mean, please don't hear me saying that to say that institutional shorts got out right here a couple days ago. That is not what happened right here. If anything, this was retail shorts, small armchair shorts who thought it was smart to short AMC at $6-7. They got fucked over right here. When you see these huge spikes up, boom and boom, that is those people with no capacity to manage collateral or to endure a massive loss getting out. Once they covered, probably some big institutions came back in. You saw the short interest go up. New shorts were established right here, and it got hammered back down. In no way did I mean that any institutions got out in this run-up. Big institutions are not going to be forced out on a $1 price move. What do I think of people saying the price will be at 140 on March 1st? Well, I guess they've got 24 hours, Peter. They'll say they changed the algo. They'll say they stretched out the algo. They'll say I was early. We've got to make it April 1st now. I've listened to 2 years of this nonsense on the algo predictors, the people that want to take a picture from 2 years ago and paste it over this week or this month. They've not been right one time. There are algos that control every bit of trading that is going on in the market, 100%. But they're not repeating in predictable patterns. They're repeating based on thousands of inputs every single day. And what you saw happen with AMC yesterday was 100% a price move up due to the lawsuit, due to the changing of the risk of arbitrage, the changing of the equation of APE being converted into AMC. That's why right when that lawsuit update dropped, APE fell and AMC ran up. Now, how do I know that? Because I've been doing this more than a couple months. I'm not saying there are not algos. Tony DeNaro doesn't believe in algos. Fucking get the wax out of your ears, dumbass. Everything is run by an algo. Your mistake is assuming that algos are so stupid that they repeat, that you can just drop a picture from 18 months ago over this month and say it's guaranteed to repeat by March 1st. That is a very naive understanding of the market and what drives algo decisions. And you are going to lose money if that is your outlook. You're going to lose money on call options, and you're probably going to lose money in your portfolio because you don't understand how markets work. All right, after hours, we've regained some of the losses during the earnings call. We're back up to 675 on AMC, not too bad. I would like to see sometime between now and March 14th a good solid push over $8 where we hold it overnight. I think, honestly, guys, for me to get excited, we need to push rapidly from 8 to 9 to 10. Rapidly. So that people don't have time to react. The shorts don't have time to react. Then it gets exciting to me. So the day that you see 8, 9, 10, I'll be streaming live here. Until then, it's just going to be a day of sitting here having to explain to people, you know, like some of these other channels do, why it's not fulfilling your prediction and dealing with trolls and haters. I don't have time for that. When we see a push, and there's a chance because of the high cost to borrow, the high short interest, and the uncertainty with the vote and the lawsuit. There's a lot of unknowns. Cineworld and Regal. Any news could drop to kick this thing off. Still excited about the play. Still plenty of time to worry about April 27th and dilution. Rest easy, rest tight. Pay attention to this channel. If you need to go for excitement to the other channels, that's cool. I get it. But come back here for the balance so that you're not making emotional choices with your money. Could the next run up reach 140? I mean, there's no limit, LG, in a fast and rapid short squeeze. There's literally no limit to what a stock could go to. If you look at that one I just put up, MSGM ran from a couple bucks to $80 in a day. There's no limit when shorts are covering. What I will be doing is not trying to put a price in my head, not trying to anchor a number in your brain. Price anchoring is very dangerous, guys. When people give you a price target, whether it's 140 or 500,000, they are going to anchor you into either selling too soon or becoming a bag holder. What I will tell you is into the next run up, I will be selling. I will be selling in brackets as it moves up. And I will not be looking back after that. And I want to apologize for that. You want to complain to somebody if you're still bag holding after the next run up, whether it's 72, 140, or 1,000. You want to complain to somebody because they gave you a higher target than what it ran up to. Go complain to them. Do I see a heavy push down before the move to 8 to 10? I do not see a heavy push down. As long as there's no update in the legal news right now, AMC is the play for bullish investors. AMC is the play that has the potential to push up. There's no more bad news ahead of AMC. We got past this quarter. The only risk for AMC is market news, the Fed, Russia, Ukraine, nuclear war, or the judge saying, if the judge says, you know what, we're not going to wait till April 27th. We're just going to declare that the vote can go through and it's fine. If she says that tomorrow, AMC is going to drop and APE is going to run up. It's hard to call, guys. I can't give you, any real basis for judging that risk. You got to make your own assessment of all of that risk. What I can say is if APE gets cheap enough, and my current belief is the judge will rule in AMC's favor, if APE gets cheap enough, I'm going to be adding some more APE. It's never boring play, I'll tell you that. It's never boring. Well, my battery is completely discharged. My cigar is out. I'm getting hungry. I think we've pretty much beat all the dead horse questions that you have to death. Hopefully this was helpful for some of you. Gus says, how low do I see APE going up? I mean, it would be stupid for them to push it below where it's at, Gus, but if it drops to $1.50 because people think that there's going to be no conversion, I personally will consider adding some. If it stays right where it's at, then that's because somebody's buying it. Somebody also believes, like me, that the AMC will win the court case. Six Sun says if it drops to $1, he'll be buying more. I'll definitely be buying more if it drops to $1. Unless, guys, if a judge says this is not going to happen, this vote, this conversion is not going to happen, and you see APE drop to $1, I'm not buying it then. If the conversion is off, I'm going to think twice about adding APE. I'm just saying, if organically on no news, it's slowly drifting down, I'm going to start looking at adding some more. Punchy Nuts, thank you. Peter, thank you. All right, time to go turn on the oven and get my pizza ready. Get the bottle of wine open for the wife. Give her a few hours of my time. I appreciate all of you for hanging in here. We only had to boot one person today. That's not too bad. Am I going to be live tomorrow? If we're pushing over 9:50 tomorrow, which I don't think we will be, but if we are, I will be live. 100%. If there are some interesting day trades in the market, March starts a new month tomorrow. Today was kind of clean up the portfolio month for a lot of firms, end of the month. March is a new month. If there's some compelling plays that I'm day trading, I'll come on live and work with you guys on that. If not, if I'm not live, I will be in the Discord. I'm going to spend some time tonight and tomorrow morning going through this earnings report, getting a video ready for you with my full thoughts on it. And we go from there. Yuka Frita, by the way, did you see my photo on the community tab? I went through the grocery aisle, fresh produce, like 3 times trying to find some fucking yucca, and I couldn't find it. So at the end of the day, I ended up buying some green plantain, and I made some delicious tostones yesterday and some homemade mojo sauce for dipping. I probably need to go. We have a Fiesta Mart here. I don't know if you guys have Fiesta in your local area, but it has more ethnic foods. Probably need to go there, or maybe Central Market or Whole Foods. I got a Whole Foods right down the road. My HEB did not have yucca, but I was having a craving for some fried yucca with mojo. Yeah, I need to do that this weekend. I need to go to Whole Foods. But the tostones were banging. Jack, is that right? You have something called El Fudo? Is that... Fiesta is a fun grocery store to go in. It's kind of like the Korean grocery stores. You got the whole live fish market. You got every type of Asian food that you could want. Plus you got all of the Hispanic foods. And then we have pretty much an aisle for every European country you can think of. All right, ladies and gents, time to recharge the batteries. Get ready for another day. Keep your emotions in check. I know I see it in my Discord. I see it in my friends. Everybody, Tony, should I buy call options? Should I load up right now? Chill the fuck out. I know there are flavors of the month getting you really hyped up. If you already have a large exposure to this play, look, make your own choices. If you want to load up more, that's on you. I'm sitting pat. My exposure is what it is. I'm not looking to add any more. I'm waiting for the run up and the payoff and to get the fuck out. Have a good night, guys. Love you. Peace. We'll see you on the next live stream.